With that, welcome all to our February 16th, 2021 board meeting. Michelle, would you please call the roll?
Director McLaughlin?
Here.
Director Bernstein?
Present.
Director Crawley?
Present.
Director Jones?
Here.
Director Solano?
Here.
Very good, thank you. Would you please join me in the pledge to the flag? I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. All right, well, thank you. Michelle, I know we received a letter with the request that it be included in public comment. Do we have any other than that?
We did receive one and we'll add it to the minutes. And that was from Palo Alto Park Mutual Water Company. And we do have one public comment from Lynn Bramlett. So if you give me a moment, I'll set her up. Lynn, you're free to give your public comment now, if you can.
Thank you, Michelle. Can you all hear me?
Yes.
Hello. Okay. So I asked the fire board via the EPREP committee to refocus the work of the OEM program into one more aligned with its written stated role. There is a major gap between the written stated role in the budget document and staff reports and the actual work being performed. And at the last emergency preparedness committee meeting, the fire chief told us that one of the primary employees in that program spends most of his time on special projects at the chief's discretion, so more of an internal focus. So the gap between the written role and what is actually being done, is causing confusion and other issues. In the budget document, one page for the community crisis management program describes a very broad role where the OEM program, by extension, is promoting the general disaster preparedness of the communities within the district. And the other page on the district's disaster preparedness program is described as a program that serves to maintain a constant state of operational readiness, disaster recovery capability, and emergency preparedness across the fire district's jurisdictions. And when I add these pages together, I see a budget of almost 1.4 million. So I do want to say, and I know, later you'll be talking about this RFP, but as a resident, I think the OEM program should focus more on its stated written role in a more realistic version. I don't consider the current descriptions realistic given, the staffing, because the residents' property taxes are the main source of funding for the district's budget. So I think they should have priority for services, and the jurisdictions and their residents represent a greater priority. There are so many needs that could be done, especially as I educate myself more in this general topic, that needs work without, casting blame or anything, of that kind. So I think we need to take care of what's needed locally before giving priority to, for example, helping Facebook with a possible, demonstration, or outside groups like the Urban Search and Rescue Team. Thank you.
Thank you, Ms. Bramlett, for that. That brings us to...
Director McLaughlin, we do have one more public comment. And
all right.
Rick DeGolia, I believe you can speak now.
Yes, hi, can you hear me?
Yes.
Yes.
Okay, great. I just wanted to say hello to all of you and let you know.
Rick, I don't know if you can hear me, but you cut off abruptly.
Oh, okay, sorry.
You're back, you're back.
Okay.
I think you can probably start from the top.
Okay, good. Well, as you all know, I am a member of the Atherton City Council, and I just wanted to say hello and let you know that myself and our newly elected City Council member, Diana Hawkins Manuelin, have been appointed as the liaisons from the Atherton City Council to the Fire Board. So we will be attending your meetings. I'm sorry we missed the meeting, the special meeting last week, but we will be attending your meetings and we'll be tag teaming together. And we look forward very much to working with all of you over the year.
Well, thank you, Rick. And I'm sure I speak for everyone when I say that we're looking forward to working with you and Diana as well. Michelle, any other public comment?
That was it.
All right, well, thank you. Next up is the fire chief's report.
So directors, I'm happy to go now, or I know sometimes we have presenters like GovInvest. If you want them to go first, then they can not have to wait through portions of the meeting, but your call.
If there's no objection, I'm happy to make that that switch.
Yeah, that's
good idea.
Outstanding. So
okay, well, hearing none, Chief, can you introduce Mr. Summer, or will Kathy?
Actually, I'll let Kathy do that, since she's been working with them obviously much more than I have been. But you know, they're prepared to provide you a presentation. I know she's prepared to speak to it as well.
Right,
okay, so we have Ira Summer here from GovInvest, and he will be making a presentation on our pension funding and hopefully answering a lot of the questions that you have, or you can also direct questions if you have them. So I'll let him take it away, Ira.
Kathleen, before he starts,
Kathleen, hear me?
Yeah, Kathleen, before he starts, could I ask you, is this pursuant to some statutory mandate, or is it?
No.
Is this something you initiated for our benefit?
I did initiate for your benefit. However, I think that the board had requested maybe information related to this. I'm not sure. I think it was during a time when I wasn't here.
Okay, very good. Okay, thank you. Mr.
Did you hear me just then?
Yes.
Did you all hear me well enough? Okay, thank you. Okay, Ira, you're up.
Okay, I feel so much better knowing that none of you have any idea why I'm here. Okay, is it okay if I start showing the PowerPoint presentation instead of the yes, agenda that's up right now?
Ira, yes, you're free to share your screen.
Thank you. Give me just a moment. All right, and sorry, trying to make sure. There we go. Let's just make sure it's all visible. There we go. All right. I'm here to talk about your retirement plan, your pension plan that you have, and I'm going to be going through this in a few steps. I'm going to be talking about some of the basics. I don't know what your backgrounds are with regard to pension. So I want to start out, I don't want to presume that you have certain levels of knowledge. I'll talk about how pension plans are funded. We'll talk about the things that get in the way that cause problems. Show how you're doing compared to other agencies across the state. And then talk about where your funding and contribution rates will be going. And then asking if you have any guidance for us or your staff moving forward. I have been giving presentations related to pensions and retirement programs for over 30 years. So one of the things that I've learned is that it is best for me to take questions as you have them. Because if I lose you on slide 3, I've lost you for the entire presentation. So if you have questions, please ask, interrupt me. This is not as easy for me to see you asking questions, so you may need to make noise to get my attention while I'm going through this, because while Zoom is absolutely wonderful for certain things, like I love what it did to my commute for this meeting, it's not as great for me to interact with all of you as we go along. So let's start with the real basics, which is that you provide retirement benefits for your employees, for the employees of the district, through the California Public Employees Retirement System, which is referred to as CalPERS. And when I say retirement benefits, I mean more than just retirement benefits, especially as a fire district. some of the things that become important are disability benefits, survivor benefits. So there are different levels of benefits for those who are actually firefighters versus other district employees. And the other thing that's important to know is that you have different levels of benefits for those who are hired prior to January 1st, 2013, and those who have been hired 2013 and beyond. So going to the next screen, I'm showing the 4 different levels of benefits that you have. Your firefighters themselves are split between pre-2013 and 2013 and beyond. The benefits pre-2013 are referred to as 3 at 50 benefits, meaning that the firefighters who retire under that receive 3% of their pay for each year they work, multiplied by their years of service. And they are eligible to receive that anytime after hitting age 50. More recent hires are at 2.7 at 55, meaning that they need to get to age 55 to get a slightly lower benefit. Also looking at the contributions here, the contributions paid by the firefighters, most firefighters across the state pay a 9% of their pay each year. Your classic firefighters are paying 3% more than that, some additional contributions pay, so that they're paying 12% of pay. Those who are in PEPRA are paying half of their normal costs. They're paying 13.75. Your non-fire employees have a slightly lower benefit structure. So those who are in the classic plan have a 2.7 at 55. Those who are in the miscellaneous, hired since 2013, have a 2% at 62. In terms of how this is funded, so that's what they're eligible to receive. These are defined benefit plans, meaning that the amount that they receive, the benefit they received, is defined by the law. So the question is, how do you fund these? This is different than the defined contribution plans that most private employers have right now, where the amount that gets put in is defined by the rules. But the way they're funded in concept is relatively similar. The idea is that you pay for these benefits while you're working, accumulate an amount at the time the person's expected to retire that should be enough to pay them the level of benefit that they're going to get in retirement for the rest of their life while they're retired. So in order to do that for a defined benefit plan, we get a target retirement age. We figure out what their life expectancy is. We meaning the CalPERS board, has a target investment earnings, how much they expect to earn each year. And from that, they figure out how much you need to have at the time you expect them to retire. And that drives how much you put in each year, which is referred to as the normal cost. Now, the difference between these defined benefit plans and the defined contribution plans that you find in the public sector are more a question of risk. If something doesn't happen the way that's expected, who pays for that? In a defined contribution plan in the private sector, if something doesn't happen as expected, if it's a little worse than expected, the employee ends out retiring with a smaller benefit or has to pay more. In a defined benefit plan, which is what you have for your employees, if things don't go as well as expected, then the district pays the extra. So showing the next is a picture, which basically shows, here is how the gray shows the accumulation. If things go as expected throughout somebody's career, you are accumulating more and more money until you get to their expected retirement age. That amount then is paid out over their expected retirement, which is the green. Now, if somebody lives longer than expected, this is what happens in the red. In a defined contribution plan, that person would have no money. In the defined benefit plan, this extra is paid by the district. Now, that also means for those employees who don't live as long as expected, the district ends out getting a benefit from that. On average, people live an average life expectancy. So you have some winners and some losers. And so on average, there is very little impact for this for the district as a whole, but for individuals, this could be very costly. Now, what tends to have a bigger impact are investment earnings. The amount that you're accumulating with, the part that was in gray, is this line over here in blue. And so, is there a way for me to, no, that doesn't show up. So if the earnings are less than expected, then that's the red here. The district needs to make up the difference in this defined benefit plan. So that those are, and if we look at the biggest reasons why your plan now has an unfunded liability, which is what this graph is showing. We looked at your plan, your plans. We looked at the reasons why you have unfunded liability, as stated by CalPERS. The green over here shows the proportion of your unfunded liability that's due to investment returns being less than CalPERS target. So a little less than half is due to CalPERS not hitting their targets over time. The blue relates to CalPERS assumption changes, which was primarily them lowering the investment targets. If you look back 25 years, back to the mid 90s, back when the stock market was booming and everybody thought you could earn 10, 15% easily every year. CalPERS had an assumed rate of return of 8.75%. Over the last 20 years, they've been slowly lowering that. So that now it's down at 7. So as they lowered that, since they expected less money to come from investment return, more money needed to come from your contributions and employee contributions. So your contribution rates went up and your funding target, your actuarial liability went up. And so that created an unfunded liability. So for your plan, approximately 55% of it is due to your unfunded liability is due to assumption changes, but a little less than 45% is due to investment return. And only this tiny sliver in green is due to other causes, experience being not as good as expected, maybe people living a little longer than expected. Now, this graph shows compares year by year investment returns that CalPERS earned against the red line, which is their assumed rate of return for the last 35 years. And a couple of things you can see. First of all, it tends to be a little volatile. You know, a lot of years are above the line, especially prior to 2000. But we've got some that are below the line. And if you look at trends, the rates have been trending slightly downward over time. Now that comes for a variety of reasons. One of them, for those of you who are my age or older, remember what bond interest rates and bond rates were like in the late 70s and early 80s, where we had hyperinflation coming in the US. Bond rates were about 15%. They dropped pretty dramatically in the early 80s, and they've been dropping slowly since then. So right now, short-term bond rates are close to 0. The Fed dropped them down to almost nothing in early 2020, about a year ago, to fight off the recession that was potentially occurring because everything was shutting down due to COVID. Now, these returns are relatively volatile year by year, but a pension plan, a defined benefit plan, is a long-term thing. So one of the things we did is we took a look at returns over a 5-year period, and you see rates becoming a little more stable, and over a 10-year period. And you see that rates are a little more stable over time. In the years in which, like we're showing here, you had the housing bubble crash, the market crash, the housing bubble crash. And actually during that 10-year period, you also had the dot-com bubble crash. the average returns are pretty low, 2-3%. But overall, most of the 10-year periods, even with this being taken into account, are averaging pretty close to the 7% return. That is their target right now. And that, although we're not excited about it, is reason for optimism. Now, a lot of I get asked very often, if the markets recovered from this .com, from the bubble bursting, from the recession in 2008, 2009, 2010, why is 45% of my unfunded liability still due to the market not hitting targets? And that's what this graph shows. So what we did is we assumed you had $500 in your account in 2007. And then we looked at the returns that actually occurred year by year. Now you'll notice right now we would have $922, which is more than the $500 that you started with. But the dotted line here is the amount of money that CalPERS expected you to have. This is hitting the 7.5% return targets that they had at the time, dropping down to 7% in the later years. And this target, the difference is $348, is approximately 1/3 of the amount of the assets. So even though assets are higher than they were a decade ago, they are still behind where they would have been if you had hit your investment returns. And that is where you needed to be based on the targets. So that's why there's an unfunded liability. So keeping this in mind, what this means is that for most agencies in California, most of your unfunded liability is due to forces outside of your control. It's due to CalPERS making their assumptions more conservative because bond rates have been going down, and the market volatility not being your friend in this case, and average returns being less than expected. So if we take a look overall at how you are doing, how your pension fund is in CalPERS compared to other agencies in CalPERS. First of all, let's take a quick snapshot of where you are. Your miscellaneous plan, the classic members hired pre-2013, you're 76% funded. Your total contribution for that plan is about $500,000 a year. For the PEPRA, the newer employees, you're about a little more than 90% funded and are only contributing $91,000 a year. For the firefighters, the ones hired before 2013, you're 81% funded and are contributing about $6.7 million a year right now. And for the ones hired since 2013, you're 91% funded and contributing a little more than $750,000. So in total, you're about 80% funded and you're contributing about $8.1 million for the coming fiscal year, 2021 to 2022. So let's put that in context. For your miscellaneous employees, you are being 76% funded, pretty much in the middle of where agencies in California are for their miscellaneous classic plans. Most plans are between 70 and 80% funded. You're a little bit above average for that. So that's a good place to be. For the miscellaneous PEPRA, you're also where the bulk of plans are right now. 91% funded puts you almost exactly in the middle. For the fire, being 81% funded, you're better off than more than half of the plans, than about almost 2/3 of the plans in the state. So you're in good shape. Not phenomenal shape, but you're in good shape. And for the PEPRA, for the new employees, you're where most of the PEPRA fire plans are, PEPRA safety plans are in California. So overall, you're at or above average for plans in California like yours. So that's good news. In terms of contributions, your normal cost is the cost that you pay each year if you were right on target. That's the cost for each year of service, not the total contribution, but the cost for each additional year of service. So that's related to the level of benefits. your level of benefits for your miscellaneous employees hired prior to 2013 are a little above average, so your costs are a little above average. You're contributing 14% for them. But for the PEPRA, almost everybody's got the same exact formula, so you are right at the middle for that group. For the fire, you are in the slightly more expensive group, the 3 at 50, and so your contribution's a little higher than most. For the PEPRA safety, you also have a slightly high, mostly the benefits similar to others. It's pretty much near the middle, but a little bit higher at this point. So where are these costs going to go?
Could I ask you a question? I'm Chuck Bernstein. I wanted to ask a question about what you just said. In our packet, we got presumably some slides, but the one I'm looking at that's in here appears to have different information than what you're talking about. It's something that's called comparing funded ratio. Do you know what I'm talking about?
Within the risk pool, yes.
Yes. I'm looking at this one, and it shows us as being 79% funded, which puts us down well below halfway, almost down in the lower third.
Okay, I'm
looking at the funded ratio, and I'm trying to understand. You were suggesting,
and I'm hoping that I have pulled up the right slides for you, because this is what I thought I prepared. So I cannot see what you have.
I've got this one here. I don't know if that looks familiar to you.
Within the risk pool, okay, which is range, frequency, and that's 2019 histogram. That's right. And which group is that?
This is, I thought it was all of them. Am I missing?
It would have a heading, 2,100. Okay. So that would be, that I don't think we did a total for all of them.
Okay, again, this says funded ratio is kind of the heading. And if you look at the side here, it talks about 79%, right there.
Right,
okay,
and I think overall right now, we have you at 80. So I am not sure where those slides came from.
This was the group that Ron had sent on like January 26th or something.
Okay, hold on one second. Let me stop sharing so I can check my other versions to see what happened. Because we did a few versions of this to get to one that told again, the numbers should not have changed. But we
suggest here that we're in the lower third, which is what troubled me when I read it.
Yeah, so give me a moment to check 26th. I'm looking at that right now. $80.9 is still there.
Chuck, where's your information from?
It's in our packet on page, sorry, let me get my glasses because the page number is too small.
This is what happens when we have
page 16 of the slides.
Okay, 16 right now is the 10-year rolling average. This is...
I'll forward what I had gotten from him.
Okay, yeah. I'm glad you're asking. I want to make sure we're all on the same page and looking at the same pages. Do you have
heading? What's the heading that you have, Chuck? Is it comparing funded ratio within the risk pool?
Yes, this one right here.
Right, and then at the bottom is still Menlo Park funding ratio as of June 30th, 2019 at 79%.
Yes.
That's what you're referring to?
Yes.
Did you send me the?
Yes.
Okay, give me just a moment. I'm gonna now hope that the internet moves quickly. And you sent it to me, you sent it to Ira at GovInvest?
Ira at GovInvest, yes.
Yeah, okay. Let's see how long it takes. Looks like something is coming through.
If you'd like, we can come back to this. I was just...
Well, my guess is that if you are seeing that, then you are that the rest of the slides are not matching up also.
They don't match exactly. I mean, we've got ones, it's not like there's a discrepancy, but we have some slides that you didn't have.
Oh, this
and you have some that we did not have.
It was 2019 versus 2020, right? I think that was.
Well, no, this was a really early draft of the slides. This should not have been sent. Yeah, this was a really early version of the slides. Yeah, this was like the first draft. Let me send you back. I hate to, I apologize for this. I mean, and let me look at the slide right now.
You want to send the group that you're looking at to Michelle?
Okay.
Maybe Michelle could disperse it out.
Hold on, let me go back to my email. What is Michelle's email address?
MKNIEIR.
MKN.
Hold on, everybody.
ANE.
Wait. Ira, what are you trying to send me?
Well,
the PowerPoint that I'm actually using.
Okay.
Michelle, this slide is in our handout. Are you able to display it?
Hang on a second. So you don't want to see the version that Ira has. You want to see the version that's in the packet.
Yeah.
Okay.
No, the version that's in the packet was a very early version and has been corrected.
Has been updated. That's why I'm asking.
Right. So and again, it's MKNEIER.
Wait. If what is in the packet is the older version, maybe you should continue on with your presentation using the version that you have, since that one's more accurate.
I'm sending you this, the one I have, so you will have it. Share your
screen again and go back and continue on with your presentation.
Can he send it to you to forward to the rest of the board?
Absolutely. Okay, that's what I missed. I didn't hear that.
Okay, so I want to make sure I have the.
So my email. Let me just repeat it to you. It's MKNEIER@menlofire.org.
Okay.
Yeah, and why don't we keep on with our discussion, and Chuck, if you would hold your thought in mind, and we'll come back to
that. Maybe though I could just ask Ira to summarize. In general, you feel that we are kind of above the midpoint in terms of our position in terms of the liability.
Yes.
Okay.
That I think that, so as I said before, it's good. You're in good shape. You're not in phenomenal shape, but you're in good shape. You're in better shape than most. And so, and the next few slides are going to show you the implications of that. Okay, I think I just sent this to Michelle. Michelle, let me know if you've gotten it.
I have not received it yet.
Okay, I don't know if tilting this towards the internet makes it go faster.
Okay, why don't we move on, and we'll come back to this. Mr. Summer, if you'd pick up wherever you left off.
Okay.
And we can come back to this.
Jim?
Rob?
Yeah, I have a question while we're on this.
Okay.
Liability. What's our unfunded liability total to date now?
Your unfunded liability total, give me a moment, is come on, don't freeze on me. This is not. All right, are you able to see the PowerPoint right now?
Yeah.
Yes.
Okay. Then I just need to figure out why I can't, come on. Sorry, for some reason. Let me try this again just to make sure. It seems to have frozen for a moment. And because my computer can sense when I want to see something and will make me suffer if I haven't treated it really nicely. I apologize. Ken, this may be a good time to finish the chief's report while I reboot my software and come back. And hopefully by then you will have the PowerPoint and I'll be able to answer your questions and move on from here.
Okay, very good. Thank you for that. Chief,
Rob, Jim, can I just?
Please, Robert.
I think there's a chart on page 15 of the document that we got. Rob, maybe this might answer your question. It talked about unfunded accrued liability.
I'm trying to get what our total unfunded liability is.
And I think if I remember correctly, it is somewhere around 50 million.
It's okay. On the sheet we got 53.97 million.
Yeah, that sounds about right.
Okay, so based on the financials that's in the packet, it looks like it's like just under 50.5 million.
Yeah.
Or 50.4 million. Or actually, that was for 1920.
So again,
the adopted budget would make it 56.6. 2021. Let's just keep going.
Let's freeze it here, and Mr. Summer will be coming back.
I'll be back in a few moments. I'm going to reboot my computer, and that normally fixes everything.
Okay, great.
So thank you for your understanding.
Sure, thank you. Chief, why don't you give us your report?
Yeah, I'm ready to go. So Michelle sent you a couple attachments. She mentioned the one, and you heard during public comment on the water district. You have that one. And then I also asked her to send out the results. Unfortunately, we were not selected for that grant for the 2 generators, but it explains why we were not. You know, it is what it is. At least we put in for it and did our part for special districts getting their money. It was disappointing, but that's the way it goes sometimes. Starting at the top of the report, I'll just whip through it. If you have a question, feel free to ask at any time. It gave you an update on the entry-level firefighters, the captain's process, battalion chief, where we are with that, and then both the division chief and obviously HR program. And I'll start to eliminate those now that people are on board like Francine, so you don't need to have that on there anymore as well. On COVID, it gave you an update on what's going on with the latest. I noticed there's a mistake in the second paragraph. At the bottom, it says incidents we're at 383, while the actual number of responses confirmed positives were 382. That, for whatever reason, that number sounds high to me, only because before it was like a 1 to 3 ratio. So I don't know how that changed given the fact that that's where we were before, but I'll find out. That doesn't sound right to me. So For sure, we've had 383 potential contacts, but the number of positives was typically about one to 3. Once it did follow-up testing, it could be higher than that. I mentioned the 4 firefighters that participated for 3 days at the county Mass Vax event. We're doing that again coming up this week. They're in South San Francisco. I believe at the airport is where this will be held. I guess that'd be San Bruno, right? Or County and City of San Francisco, whichever you want to say it is. But that's been advertised now. And then law enforcement is going to get vaccinated along with teachers starting on the 22nd. So that's an update there as well. And then, you know, the county's trying to roll out still, and this is all coming down to a supply issue, more vaccinations for the 65 and above. I have not heard where the event will be down here in the south part of the county yet, but I did put a call into the county to see if there was any way we could help support, make that happen in terms of just, you know, maybe relationships with different folks and find the right spot for them. I believe it will happen since we've had a central county, now we'll have a north county, and then at some point, hopefully we'll be down here in the southern part of the county to do a mass vaccination event. For some reason, the one at the airport is only going to be a day, and I don't know why that is, but it is what it is at this point. So anyway, firefighters from across the county are supporting that in conjunction with county health and county EMS. So that's a good thing. I gave you the numbers and how many people have been vaccinated. We're probably doing about the same, if not a little bit better, with the number of employees that voluntarily do that. And we have the rapid test now. We're adhering to obviously as many or all the protocols that are out there, trying to stay up on that, even as things relax a little bit. But clearly, you know, that's also been a good thing to do mass vaccination for those that wanted it within the district. All the firefighters are done. Staff has gotten their first shot for those that wanted it, but we're working on trying to get the second shot. That's a little bit of, or was a little bit of a concern, just because the state guidelines continue to change, you know, sometimes daily on who's going to get what. The town of Athens, obviously the directors can speak more to that because you had a meeting with them. I just tried to outline it there a little bit. City of East Palo Alto tried to go through what's going on with the Ravenswood Shores Business District. We do have a meeting coming up again on the Dumbarton Rail Station that may or may not happen on University. I hope it does. City of Menlo Park, I got asked, you know, this is not my list. I actually took this from an email that Director Bernstein sent. So that list is sitting there underneath priorities, potential talking issues with the City of Menlo Park, which I know the date is set now. I think it was what, March 16th at 5 p.m. So you still have some time to prioritize that list or to go through it and pick your top 3 or 4 or whatever you jointly choose to talk about.
Harold?
Yep.
Harold, quick question. Number 7 on this list of topics is, or maybe Chuck, someone, development of the district's Willow Road property. Do y'all mean the city's Willow Road property? I don't know that we own property on Willow Road. Chuck, did you mean the city's Willow Road property? What are you talking about here? Number 7.
You're muted, Chuck. Chuck, you're muted.
Thank you. Yeah. I don't myself know at this moment what that meant. So I will look up my list to see if there was a transcription problem or something else.
Okay, thanks. Because I'm like, wait, when did we buy property?
It's on our agenda for tonight to discuss also. So I'll look it up so that
Okay, thanks. Yeah. Thanks, Harold.
Pretty much, yeah. It's pretty much just a cut and paste. And yeah, we don't own property on Willow, so I'm sure it's just a typo.
Chief, if I can stop you there, if Mr. Summers ready to go, I don't want to lose the continuity with his presentation.
Yeah, no worries. I knew I was the filler, so go for
it. You're muted, Mr. Summer. Yeah, you're still muted. Mr. Summer, you're still muted.
How about now?
Yes.
Okay. Let's see what else can go wrong during this presentation. I appreciate your indulgence. All right, I did go, while I was rebooting and joining, I did notice that my associate sent you the wrong file. We apologize for that. He was sending the file while he was on vacation from his phone, and it's not an excuse, but at least I understand what he did and why. So we apologize for that. Michelle, have you received the email with the other file? Now you're muted.
Thank you. I did not receive anything.
Okay, I will send it again after the meeting's over, but I will run through all this with you. And again, if you have questions, if we need to do this at some point in the future, you know, this was our, you know, I'm happy to return if that's would be helpful.
Okay. Why don't we go ahead and complete your presentation with what we have, and if you could just take an inventory of any outstanding issues that aren't contained in the presentation that you have, and we can do follow-up later. Okay.
Yeah. And one of the things I noticed about the earlier version that we corrected, and it was put together by as a first draft, as an example of the structure of a presentation, of an education presentation, is that rather than breaking the funded percentages down between classic plans and PEPRA, and between miscellaneous and safety, they were all put together. And as you probably noticed, and the reason that I broke it down for each of them is that there are differences. The graphs look different for PEPRA plans. The PEPRA plans just started in 2012. They're almost all better funded than the classic plans. The safety plans, not as well funded overall, or actually slightly better funded overall than the miscellaneous plans. The averages are almost the same place, but there are a number of safety plans that are better funded overall than the miscellaneous. So that's why we broke it down, and I wanted to show you the pieces. I think as long as each of your pieces are doing well, overall you're in solid shape. And I do know, because you are at 80% funded, most agencies across California are not that well funded right now. So I think that is one of the important messages to take out of this. Skipping ahead to where this is going, where your costs are going. I want to start with talking about costs and then come back to your unfunded liability. And I want to do that in two pieces. First, I want to start with your normal cost, which is the cost attributable to each year of service. If you are 100% funded, this is what the contribution would be. And what you can see by this graph is that your employer normal cost is expected to decrease slightly over the next decade or two, primarily because you will have your older employees retiring, your classic employees. And when you hire new employees, you'll be hiring employees that are in the PEPRA plan. The PEPRA plan is less expensive. So over time, your normal cost, and therefore your long-term contribution rate, is going to be declining as a percentage of payroll. That's good news. This was one of the goals of the Public Employee Pension Reform Act, as passed by Governor Jerry Brown in the legislature in 2012 when they passed this. Now, your total contributions, which is the next picture, are expected to increase faster than most agencies' revenues are expected to increase over the next 5 years, continue increasing for about a decade before turning around and slowly moving down again. Now, the reason for that, the orange is your normal cost that we saw on the previous page. The purple are your unfunded liability payments. So the amount that you are behind target right now has to be paid back. And CalPERS breaks that into pieces based on how those pieces were created and when they were created. And for those pieces that were created prior to 2019, CalPERS phased them in over a 5-year period before having you pay the full cost. And a big portion of this came from CalPERS lowering the discount rate, the assumed rate of return, between 2016 and 2018. Dropped it from 7.5% to 7 3/8 to 7 1/4 to 7, and then slowly phase that in so that you won't be paying the full cost of the more conservative assumptions until the 2024-25 fiscal year. So this pattern we see for agencies all across California because of the more conservative assumptions and the phase-in period. So your total contributions are expected to increase relatively dramatically over the next few years. Now, this picture assumes that CalPERS hits their investment return targets and keeps their assumptions in the same place over the next 20, 30 years. The next graph shows what happens if they don't hit those targets. And let's start with a little bit of optimism, which ironically is in black. Now, if they do better than expected, if they hit 8% instead of 7%, your rates, now the green are the 7% rates that we saw before. They're going up, peaking out around 2030, and then coming down. If they do better than that with black, if they hit 8% each year, the first few years, they stay in the same place because there's a time lag between when CalPERS gets their returns and when they start charging you for them.
So, Ira, I'm going to assume that you're saying better than the 7% discount rate right now. Is that correct?
That's correct. If they do better,
just to be clear.
Right. So if they earn 8% each year, 8 is better than 7. The more they earn, the better it is. The more it comes from investment return, the less has to come from your contributions. So if they do that, then your contribution rates will still rise initially, but they'll peak at a lower rate and then come back down. Your plan will get 100% funded sooner, and you will be paying just the normal cost rate beginning at about 2035. Now, on the other hand, if they earn less than expected.
I want to ask a question there, just so I'm understanding what you're saying. You've kind of looked at this in two pieces, the current portion and the past portion.
Correct.
If they don't hit, or whatever the rates that they earn on their portfolio, are you assuming that once this year is over, it becomes part of the past, or are you always keeping kind of are you still dealing with the normal costs? This year will always be part of normal cost, or will this year become part of unfunded liability in the future?
Like compounding?
Next year, this year is in the past.
Okay, thank you.
Okay. So each year as it goes along, what our software does is it projects out what you would expect to see from a CalPERS valuation in each of the future years. We take your data that we got from CalPERS through your offices. We project your current employees to either keep working or retire at the rates CalPERS assumes. You get replacement employees coming in that we're putting into PEPRA. Salaries are expected to grow. All of this is rolled forward so that we run a new valuation each year, just like CalPERS will do, so that we can give you a good picture of what you can expect to see as the results of the CalPERS valuations in each of these future years.
Would you expect then, if let's just say that CalPERS doesn't make the return that it expects, it's below 7%, would you expect not only will the unfunded liability increase, but would you expect that the normal costs would increase as well?
The normal cost will increase if they change the expectation of future returns. If they change the discount rate, if they lower the discount rate, then the normal cost will go up. But if they keep assuming they're going to hit 7, even if they hit 6 each year, but they keep assuming, oh no, that's just bad luck. From now on, we're going to hit 7. Then the normal cost stays where it is. Now, if they lower the discount rate, and we can talk about that in a few moments, they lower the discount rate, and they are going to be talking about lowering the discount rate they're scheduled to do that in their meeting this November. It's something they discuss every 4 years. This is the year they're scheduled to discuss it. If they do that, it will not happen prior to the June 30, 2021 actuarial valuation report, which you will not receive from them until August of 2022, and will not impact your contribution rates until the 2023-24 fiscal year.
So Ira, can I ask you a quick question regarding their future discussion on lowering the discount rate? When they do that, when they have that discussion, do they, how many years do they look at? I mean, literally the discount rate was lowered by 1% over a 20-year period, right? Correct. 8% to now 7%. And it was a very painful time during the 08-09, recession, the whole thing. So when they talk about lowering the rate, how far out are they looking? A 20-year period and maybe another 1%, which is
now they are.
That's crazy. I mean, I'm not even sure we'd get 5% on our returns right now, which is already significantly lower than the 7%. That's the current discount rate.
Let me answer you the question you asked, as well as the implicit question that you were sort of asking.
Okay.
First of all, when they set these expectations, they look at the life of the money in the pension fund, which is over a 40, 50-year period.
Right. And that's laddered too. It's a laddered portfolio, right?
It is and it's not bonds. It's a combination of stocks,
right.
bonds, private equity, a lot of different things.
Okay.
They're right now. And first of all, before they get to the question of what are we expecting on our investment return, what they're doing the first 3 quarters of this year is looking at their asset allocation and trying to figure out the best way to balance out getting strong returns with not having a lot of volatility and not a lot of risk. So they're going to do that first.
Are they trading derivatives to hedge?
Yes and no. They're leveraging. They leveraged the equity side last year, starting so that last year, in the year ending June 30, 2020, and let me go back so I can show you these numbers again. And these are all very good questions, very important questions. You'll see here that they earned 4.7% last year. A year ago today, they were up 10%. And then in the following 6 weeks, the Dow dropped 30%. The S&P 500 dropped 20%. The NASDAQ dropped 10%. They went from being up 10% to being down 10% in 6 weeks. And then the Fed dropped interest rates down to 0. An initial stimulus package was passed. The Fed was given the ability to pump liquidity into the markets. The stock market turned around. At that point, CalPERS leveraged their equity and got strong returns the rest of the way, so that they ended out returning, instead of being down 10, they ended up being up 4.7. And that 4.7% return for the year ending June 30, 2020 was one of the best achieved by any public retirement plan in the country for the year ending June 30, 2020.
Wait, but still below your 5% worst case scenario on your graph.
Still but pessimistic. Let's not call it worst case. Worst case looks like minus 24.
10% return. Yeah. Okay.
So it was, and it's only 1 year. It's not every year. And again, if we go back to the average for the last 10 years, they're averaging more than 7. So they turned a bad year, a really bad, difficult year in the markets, into just a bad year. And so that was very commendable of them. But still, that's one point. They're going back to this picture. Their advisors, and when they happen to have $500 billion that they invest. So they have really good advisors, really expensive advisors, have told them that they expect them to get over the next decade between 5 and 6% return overall in the markets. Now, after that, they expect it to be stronger. But the latest capital markets projection has it less than 7 with their current asset allocation. So they need to make the decision whether they are going to get more aggressive and potentially have more losses in order to try and achieve what they can, or to get more conservative to balance their portfolio a little bit more and accept a lower rate. And they are having that discussion right now.
Right. And so when they have that discussion, how far out
they look out, they talk about, they let us know what's going on, what their expectations are for the next decade, but their decision is based on going out 30 to 40 years.
Okay.
And when they said it,
okay, I'm going to get off of this, but okay, sorry.
When they, I mean, these are good questions. When they set it at 7, what they announced.
But it took 20 years, Ira, to get from 8 to 7, literally from 2000, when it was 8%, down to 7% in 20 years. So is it going to take another 20 years to get down to a more, and who knows what the market's going to be like. I mean, but if it's going to stay like this, 6% isn't even going to be realistic. And so we should just continue to assume that we're going to have, unfunded liabilities. I think this board in general wants to always set aside funds to pay it down. I mean, I know that I do, and we've been doing that as a district for at least the last 10 to 11 years. So anyway, yeah, so it does. I mean, I just didn't know what the time frame was.
The thing that you are talking about right now is a topic that agencies all across California and all across the country are doing. That is when I get to the end and I ask you for next steps. That's exactly what I want to hear from you. That's exactly the direction that you should be giving your staff to work with us, if you'd like them to work with us, because you've already subscribed to our service, to come up with, to help you deal with this issue. Some of the things that CalPERS does, some of the things that happens with the market are outside of your control.
I know that.
I think this all points up, if I could just interject, I think points up the difficulty in financial forecasting in general. Robert, did you have a question or a comment?
I have a simple question, and that is, Ira, you mentioned something a few moments ago, a couple slides back, and you pointed to that that we, the district, are funded at 80% of what we need. Is there a floor to? You mentioned that 80% is a relatively good position. Hard to say if it's a safe position, but is there a maximum range that the district should look at in terms of, do we need to always try to strive for 100%, but like most things, sometimes you can't get 100%, but you might be able to get, 80%, 85% or 90%, and fluctuate within a range as other things go up and down, especially trying to hedge those downturn, which is hard to hedge at this point.
That is a very good question. It is not. It's not one with a simple answer. Going back to this picture, this is the picture of what your contribution rate is projected to be over the next 25 to 30 years. And notice the purple is paying off your unfunded liability, and that is a big part of your cost. For some agencies, the ones that are closer to 60 to 70%, hold on, all right. You probably recognize the sounds of fire trucks because that's what you do. One just passed by my house, and they didn't stop here, so I feel much better. your cost, about half of your cost is due to unfunded liability. From some agencies in California, we see it as being 3/4 of their cost is paying off the unfunded liability. The better your funded position, the lower your total contributions are going to be, the more room you're going to have in your budgets moving forward. So, and if you start at 80% funded and the market drops dramatically again, like it did a year ago, like it did a decade ago, then your purple portion here is going to rise pretty dramatically. So if you want to, so while your 80% funded is solid, if you look at sort of what people consider good, 80% is considered good under most market conditions. 60 is one where they start getting concerned if you're below 60. 80, they're usually all right. 100, everybody's happy.
Part of what and you're getting at, what I'm trying to get at is that to try to understand, because I see the chart that you had in our package on page 18, you talked about the different interest rate or percentage from 5 to 8% in terms of trying to look at some type of range of return, I assume, because the slide talked about various investment return scenario. Because I think we have something now, correct me, I think, Jim, you mentioned at our last meeting about what we have right now, somewhere is a bond or something at around 6% or 5%, somewhere in that
7.25%.
7.25% range at this point in time. And so the question is that can we get a better return? If we can, should we be just trying to focus in on something in that 7% range? Or even maybe we might be in it at a comfort level of 6% or 5%. I'm not sure. So I'm wondering if when we start looking at how we can utilize the cash that we have, what is a prudent range to try to whatever prudent for us to look at, so that we can start hedging that particular, continue to try to look at our investments in those range or better, or just staying in that particular range, so that we can continue to try to keep that 80% of funding at 80% or improve upon it.
So
did that make any sense, or is that just
it made I think it's yes to both. But I think I know what you're trying to ask. And this is, I think this is not something that that leads itself to a very quick response. Because first of all, none of us know exactly where the market is going. So part of this is a question of how much risk do you want to take? How much risk do you want to get rid of while doing this? And those are two very different ways to attack the problem. What we are doing with a number of agencies across the state is we are working with their either a subcommittee or their financial staff to put together a proposed plan that that starts with a slightly more pessimistic look as to what CalPERS will return, something that most people consider a little more realistic, a little more conservative look, come up with a contribution rate that goes along with that will fund things at that more conservative rate, and then try and figure out the right combination of giving the money to CalPERS versus setting it aside in a place where you are allowed to earn slightly more than you can from your internal reserves, to be able to cost effectively pay for CalPERS to anticipate both lowering of discount rates and CalPERS not hitting their targets, which are the two things that drove your unfunded liability to start with, and are probably going to drive increases in the unfunded liability over the next decade before we get into another cycle of boom. So rather than try and tell you about this right now without doing the analysis and without being able to show you in graphs and with numbers what's going on to help you understand the risks you might be taking so you can better decide, I'd rather not jump ahead and say this is a good thing to do.
You know, at this point, I don't want to stifle any conversation or discourage anyone from asking any questions, but we have a full agenda and we need to, I would ask Mr. Sommer if you could wrap it up.
Okay, and yeah.
Could I just answer Rob Solano's, Director Solano's question on what is the total liability? I don't know if we ever answered that.
Oh, that it's 50 something million. In fact, if I go to the next screen right here, we see in 2019 it's about 50 million. And 2020 it's expected to go up. It is 50.1 million. Okay. And next year it's expected to go. 2020 we're expecting it to be about 54 million, 53.9.
Okay, because I thought the reports that I have show it as 46.2 million for the June 30th, 2019, which is the report from 2020. Okay. And that may be because we've made pay downs that they didn't have in the number that 46.2.
Okay.
Perhaps you could reconcile, perhaps that could be reconciled at the next finance committee meeting.
Sure. Yes. Anyway, move on if you'd like. Thank you.
Sure.
So, yeah.
Thank you, Kathy.
You're welcome.
And the unfunded liability, the picture of the unfunded liability is similar to the picture of contributions, that the better your returns, the faster the unfunded liability goes down to zero. So if you earn 7, it's expected to go down in about 20 years. If you earn 6, it's going to stay relatively level. If you earn 5, it's expected to go up and keep increasing. That's sort of the short story of what's going to happen based on paying what CalPERS asks you to pay. So this gets the question of if you believe that the gray line here, the 6% is the proper target, or the red, the 5% is the proper target. If you want to get to a place where Director Jones is saying you want to be consistently 80% funded, what you need to do is make slightly higher contributions to stay there. And you can get there a little bit sooner. The contribution rates are expected to go up dramatically to keep you there at a 5% return. So if you don't want to be on this path, part of what you would need to do is jump ahead, pay more sooner, and then allow it to level off over time. So that's sort of where things are. If you have a direction for your staff, we'll be happy to work with them to bring something back to you. Again, I appreciate you letting me go early, letting me go long, letting me get off and get back on. And we apologize for having sent you the wrong slides. Hopefully this gave you a lot to think about. Any other questions?
I have just one, and I know it. I don't want a long answer, but did I understand you correctly that you're suggesting that there may be another strategy instead of paying money immediately to CalPERS, that it might be better to put it into some other vehicle and then later give it to CalPERS? Is that just? I just want a yes or no kind of answer at this point.
That is a strategy that agencies in California are using. And again, I'm not saying this is one you want to take, but what some agencies in California are doing are using what's called a Section 115 trust, where money is put into it. It is generally invested more conservatively than what CalPERS does. All that money will have to go eventually to CalPERS. But if you think there's market volatility or you're concerned about revenue volatility, you get to decide when that money moves over and whether that money is to be used to pay for your regular contribution or to pay down the unfunded liability faster. So it gives you more flexibility.
And so what's the rate differential, Ira?
Most of the pension 115 trusts try and earn something in the 4 to 5% range, but they are not as subject to volatility because they're more conservatively invested.
Right. No, I get that, but it's still on the low end in terms of the ROI based on that chart.
Right.
Under the 7% discount rate right now. It
is. And so what agencies are doing is putting it there so they don't lose money if they're concerned that the markets are going to drop or if their revenues are going to drop, and it's more than you're getting on your internal reserves, which most agencies are getting about 0.5% right now.
Yeah.
Rob, I think you had your hand up.
No.
No.
Okay.
All right.
Okay.
Could I ask Kathy, make a note, Kathy, to have this discussion at a finance committee meeting, not immediately necessarily, but before we make our next payment to CalPERS, to discuss what the alternatives might be, maybe with the assistance of Ira?
Okay.
All right. Well, Mr. Summer, thank you so much for a very informative presentation this evening, and thank you for all your work on behalf of the district.
Thank you. And yeah, I'm looking forward to talking with you again in the future.
All right. Well, thank you.
All right. Bye.
Thank you.
Chief, you're back up. Finish your presentation.
Yeah, directors, I have, well, there's more, but you have 8 items ahead of you, and it's just after 8 o'clock, so I know you want to discuss that. I'm happy to do the normal. If you see something left on there you want to ask me about or have a discussion about, I'm happy to talk about it, but you have the report in advance, so if there's nothing else, I don't think I need to spend any more time, but it's up to you.
You know, I had some comments on this Quake demonstration. You know, I think it's not properly agendized tonight, so we really can't take any action on it this evening. I think it'd have to be agendized for the next meeting. And I would ask that I believe that we had an employee that's a co-founder of Quake, of the company. And I would ask that you discuss that with council before this comes back to the board.
Sure. Yeah, we actually talked about that tonight. He and I, Steve and I met before this meeting.
All right.
Jim, I have a couple of questions. I have a couple of questions for the chief. Chief, you mentioned here about in your first section about the captain, a training captain and so forth.
Right.
Todd Ellis had that position and then he was promoted. Is he still doing training at his promoted level, or is the baton going to pass to someone else?
Yeah, so Todd became the division chief in charge of training, replacing Mike Schaefer. Before Mike Schaefer was in that position, then moved up to the deputy chief spot. So Todd is now the division chief of training. That left a vacancy for the staff captain that works in training as well. And that has recently been replaced. He's been replaced with Ken Babcock was in there for a period as the interim, but they just did an official process. And Jason Martin, Captain Martin, will be going in there as the staff captain next.
Okay, and then a couple of other questions. I wanted to ask you about the vaccination of our staff, particularly the paramedics. Did we consider at all, let me back up by saying, in my organization, we have mandated that everybody get vaccinated. We don't give them choice about it. We are too close to children, and we just didn't feel that we wanted to be responsible for somebody's health and not take full, responsibility on that. Did you consider at all making it mandatory that the firefighters, or particularly the paramedics, get vaccinated?
So I did talk to Stephen about that. Obviously, that's something that we could do. However, in our discussions, and I'll let him answer kind of more the legal issue, but that would be probably a meet and confer. I know none of the other fire agencies, nor are there any that I'm aware of that have forced their employees to do this. So everything's voluntary. And if Steve's got something he wants to talk about with the legal part of that, he could probably weigh in.
No, I don't have anything else to add. It's something that you could do.
And was there some legal risk to mandating? Everything I've read said that, first of all, that anybody can do it, but particularly where there's a definite need or exposure or risk to the organization, it's something that can be mandated, and there appears to be no downside.
If you're asking me, it's not a legal issue, so long as you allow the appropriate exemptions for those eligible for it. It's not a legal issue, it's a business decision.
Okay. Okay, I think those were the only, oh, I'm sorry, I did have one more. I wanted to respond to the list of 7 Menlo Park items and respond to a very good question that Virginia posed. Number 7 was a mistake here. I did it when I was sending this email to the chief and to Jim. Number 7 should read the district's Middlefield Road property. That is the new one, the new property that we bought from the seminary.
Okay, instead of the Willow Road property.
Yes, Middlefield.
Okay, thank you. Thanks, Chuck.
Chief, I have a question.
Sure.
Regarding East Palo Alto, you mentioned that you went to the Ravenswood Shores Business District monthly meeting, and one of the things they was talking about was, I guess, looking at their general plan around sea level rise,
right,
and the levee changes. Did they talk anything specific about that, or just in general?
Yeah, that was the first I'd heard about how high the levees are proposing to be going. We're talking double the height of where they are now.
Oh, wow. That
was significant. I know they're talking about 3-foot settlement, but we're looking at about 21 feet, 21 to 23 feet. That's a big deal. I mean, one of the things I always get concerned about there is, you know, if you have pumps, do they have backup generators? Will they work? Because in New Orleans and Katrina, that was part of the problem. Or if the levee breaks, you know, it makes for a bigger bathtub, the bigger the walls are. And not to mention, you know, we have boat launches out at the Cooley Landing. I'm sure that's not being proposed to be elevated. So, you know, there's a lot going on with the sea level issue rise. I'm not sure if all the decisions are the best, but that's the proposal, is to double the height of the levees.
Okay, thank you.
Yeah, you're welcome.
Jim, I'm sorry, I had 2 more quick ones.
No, go ahead, Chuck.
Chief, I wanted to ask you about the 2 letters that were sent to us today. I had a little trouble understanding the Palo Alto Park Mutual Water Company letter, but it appears to suggest that they have adequate pressure and they didn't like being sort of combined with East Palo Alto's other water agencies. Am I reading that correctly?
I think you are. I'd have to go back and review that conversation, but I know that was brought up. Director Crawley called me about the mayor's call to her and regarding a structure fire that we had.
Well, and I brought it up in the January meeting too.
So this suggests that Palo Alto Park Water Company is updated and is okay. It's not that company that's a potential problem.
Well, that's what they're saying.
What are we saying?
I'd rather review that tape again, and then I've been talking to Fire Marshal Johnson about that too.
Okay. And then let me ask just a real quick question about the Cal OES. I'm assuming that we did not appeal the decision. Is that correct?
No, we did not.
Thank you.
All right. Anything else for the chief? All right. Well, moving on. We have the consent calendar.
Director McLaughlin, we actually have the general counsel report, public records.
I think I did that last time, Stephen. please do not let that reflect any lack of regard for your presentation.
Quite all right. I think perhaps it just reflects that you're mind melding with me. My colleague Nicole was going to talk to you about some Public Records Act issues, but given in the interest of time and where we are in the meeting, if you'd like to jump to the consent calendar, we have no pressing need to share with you what we were going to talk about.
No, please. I think we would benefit from your presentation.
Okay, well, in that case, I'm going to turn over to Nicole. I think we will be very brief, but just a few practice tips on Public Records Act issues for the board.
Yes, I will be very brief. You've seen my AB 1234 training, so you know I speak quickly. I'm just going to share my screen here.
I think she only has 36 or 7 slides to present to you.
Oh, that's good.
So this evening, I'm going to talk today and give a brief refresher on the topic of public records on private accounts. So you may recall we covered this during the AB 1234 training in December, but we wanted to just highlight it again for you all. So as you see up there on the slide, under the California Public Records Act, communications of public officials and public employees related to the public's business are subject to the Public Records Act requests and may be disclosable regardless of whether those communications are stored on a personal device or in a personal email account. So in short, a document's status and the test here really is the content of the record and not its location. And this rule supports the public policy interest and the public's right to access to information regarding the public's business, because determining that these communications are shielded simply because of where they're located would really allow an agency to evade the reach of the Public Records Act. So from time to time, the district may receive a PRA request for information that's stored on a private device or on a personal account. And from a practical perspective, searching personal accounts or private devices of officials and employees, or relying on employees and officials to do the same in order to comply with the law, can be very time consuming and costly. So by reducing the likelihood that public records are held on a private account, the cost and the effort can be really significantly reduced. So to that end, we suggest only using district email accounts for conducting district business. And that is it. I hope this quick refresher was useful, and I welcome any questions.
Nicole, would any records retention intervals that are in district policy apply to information that may be kept on a personal device?
That's a good question. Steve, what's your thoughts on that?
That is a great question. The records retention rules are the flip side of the Public Records Act. And while the rules that Nicole just shared with you are well enshrined now in case law, the potentially million-dollar question is whether, when a board member deletes a personal email on public business, whether that deletion must be done in accordance with the retention statutes and the retention requirements, which is what your question is. And there is no good answer to your question. That is a case waiting to be happened. None of us should be the test case, which is all the more reason why you should all conduct the public business on public emails. Even if it's inconvenient to do so, you're welcome to copy your personal account on an email, and someone, send an email from your personal account to your public account, as well as whatever else you're doing. So at some point it should pass through the district's servers to avoid the district being on the wrong end of a decision answering your question.
All right.
Can I follow up with that just to make sure? Sometimes I will get an email in my personal account. Whenever I respond and it has any business to do with the district, I will copy my fire mail account so that it's in 2 places at that point. And that's sufficient.
That is more than sufficient. That is good Public Records Act hygiene.
Okay.
All right. All right. Well, thank you so much for that, Nicole.
Of course, thank you.
All right. Which brings us to the consent calendar. We have 4 items on the calendar. Does anyone want to take anything off of the calendar? All right, could I get a motion
I'll
for the
make
approval?
a motion to approve the consent calendar.
Is there a second?
A second.
All right. Michelle, would you call the roll? Michelle, could you call the roll? Stephen, perhaps you could.
I'm here now. Sorry for the delay. Director Crawley?
Aye.
Director Jones?
Aye.
Director Solano?
Aye.
Director Bernstein?
Aye.
Director McLaughlin?
Aye.
Thank you.
All right, well, thank you. All right, that brings us to item 8. Direction to staff concerning the proposed secured property tax revenue budget for fiscal year 21-22. Kathleen, are you handling that?
Yes. Yes. Okay, so this went to the Finance Committee. And what this is to do, we try to determine what we're going to use as the proposed amount next year in the 21-22 budget for the secured property tax revenue. Because the district receives in excess of 85% of its general fund revenues from the secured property taxes. In the last fiscal year, the projected current fiscal year, the growth rate for secured property tax decreased slightly from 9.4 to 7.8 respectively. We were worried about what may happen with COVID, and at this point it hasn't affected property prices or property tax. In fact, it's still been growing. So we developed, okay, so wait, on the second page, we have 2 charts showing the last 10 years growth rate comparisons. And then down below it, that's a bar chart showing the growth rate. So as you can see, it's volatile, but it's always, it's generally always an increase. Even during the financial debacle back when, it still was slightly above 0 for growth rate. But anyway, so we had given 3 options to the board or to the Finance Committee to discuss. And the first one was historical conservation growth assumption of 4%. And that 4% rate was one we had always used, I don't know how many years before I even got here, always saying 4%. And then it would come out to be higher, significantly higher. So I think it was last year we decided to bump it up to more of an actual. And that was why we had put, I believe last year we had said for secured property tax, I want to say 7.8%. Yeah, that was what we had used. All property tax combined, it was 4% increase because certain things decreased, specifically ERAF. So for this, option 2 was using the estimated growth rate assumption for the county, that the county gives of 7.8%, which is for this year. And then option 3 would be to use the last 2 years, the 1920 actual and the 2021 projected, and an average of that at 8.6. Finance Committee discussed and recommended that we go with the 7.8% as our estimated growth rate assumption. And that's all I have. So do you have any questions?
You know, I'd be curious to hear from, you know, Chuck is the chair of the Finance Committee. What was the thinking of moving from a conservative 4% to that 7.8% level?
Well, just historically, and I want to be sure that that Virginia speaks for herself too, because we may not have had the same ideas on this. They'd always used the 4%, and it was kind of, frankly, a means of hiding revenue. We never wanted to look like we were too rich, so we said, oh, we're only going to get a 4% increase, and then we get this windfall. But when we got the windfall, it looked like we were super rich, and so it didn't seem to me a very effective strategy. And I pushed very hard for us to have budgets that were accurate as best we could. I think, you know, I sit on this county oversight board that works with the Department of Finance at the county. I have a lot of respect for the county's group that does these estimates. It's a large group, they're well-disciplined, they're really good analytical people. And I just believe that what they say is what's really going to happen. And so my argument for doing this was, let's use the realistic number. We could use a higher number, but why would we think that the last 2 years is a better estimate of what's going to happen than what the county believes is going to happen? So that's why I did it. Virginia may have had some other reasons, but I think we both agreed that we wanted to use a more accurate figure.
Yeah, so Jim, I'll just answer your question as well. So, you know, the 4% number has been that number for, I mean, since I've been on the board, when I got on the board in 2011. So it's been a long time. And I mean, I think it's good that it's, you know, a lower number, but I also think that it wasn't as accurate of a picture. I didn't want to go up to the highest percentage. So I felt more comfortable with the mid-range, which actually we moved to right before COVID hit. And then when COVID hit, we always knew that we could have the flexibility to go back down to 4%. So, you know, I think that the fact that there is flexibility to change it if we needed to, based on the economic environment, you know, kind of made me feel more comfortable. But the 7.8, I think it's 7.8% or 7.6%, 7.8. Anyway, that middle number seemed to make the picture more realistic. But I know that, you know, we would have flexibility if we needed to readjust again. So I'm okay with it. I mean, it's the midpoint, if you will, yeah, rather than the highest number at what 8.6%, which I was not comfortable with going with.
Okay, Jim, can I add a little historical?
Yeah,
context?
please, Chief.
So, you know, during the the recession, I thought this was a good thing. I think that the board did, but over time it kind of outpaced itself. And what you started to hear, including from other organizations, that at one point or another were looking at our budget and our revenues and so forth, and then started to describe anything over 4% as surplus. Yeah, I think as you can hear tonight by the pension discussion, or we know by the amount of work and cost to replace stations that we have either ongoing or in the future, that there is no such thing as surplus when it comes to the money that we have. And I think when it started to be perceived that, and the board members started to see it, Chuck seeing it, Virginia seeing it, that other entities were starting to look at us from that perspective as well. It just, whatever intent we had, it served its purpose in the time. But as we move forward, it really doesn't serve a positive purpose anymore. So better to be accurate. Director Bernstein's point, the county does a really good job. They're very close on what the numbers can be. And then, you can set it from there. But yeah, this whole thing that we have surplus money, and that even that term is not a good thing to hear. And so that's another reason to stay away from, sticking with that 4%, which is really, again, kind of an unscientific assessment that again, had its moment in time and doesn't serve you well now anymore.
Well, and also the reality of it is, Jim, is that the budget has grown so much over the last 9 years. I mean, when I first got on it was probably about a $31 to $33 million budget. And if you look at where we are now, it's significantly more, over 100% more, right? In terms of where we are in total revenues. So sorry. I just think, I mean, we can always, if we need to switch it to a more conservative number under, different circumstances in the, economic and financial environment, then, we'll do that. But I think the main thing is that this board in general has been very fiscally prudent, which is, I think, the more important thing rather than, just, figuring out which percentage makes the most sense. Although I do think that this one does, but the main thing is the philosophical meaning behind being fiscally prudent is where we are as a board.
Do we need to formally adopt this different rate? Is the 4% embedded in our policy documents now?
No, it will be in the budget as approved by the board. That's when it gets approved.
As the recommended recommended rate of, is it 7.8%, Kathy?
That's right.
Correct.
But do we need to take formal action now tonight to adopt that?
No.
All right.
No, but that is the recommendation of the Finance Committee, Jim.
I make one quick comment. I just, words are important to me. And when I hear things like it was done to hide revenues.
Yeah, I don't agree with that.
It was ever done to hide revenues. I think the districts always try to be transparent, and that was not at all the reason behind doing 4%. To be
and I agree with Kathy on that, having been on this board for 9 years, going on 10 years.
Okay.
That was never the intent. It was not to hide revenues, but to be fiscally prudent.
Okay. Are there any other questions on this issue, or any other further discussion? All right. Well, thank you. So for that, Kathleen, and let's hope we're able to keep that 7.8 growth rate for many years to come. All right, next item, number 9, approve a resolution accepting the 2020 California State Fire Marshal mandated inspections. I'm guessing that's John Johnston.
Yes, sir. John, this is the annual report that we have to do for the board. Remember, it was mandated by legislation, and John's going to take and go through it with you. We just debated whether it would be a presentation or a staff report, but it's really a staff report within a presentation as well. So feel free to ask any questions. John,
excellent. Well, President McLaughlin and board members, just before you is the requirement from Senate Bill 1205, which requires us to be able to report to our reporting body the state mandated required inspections by the state fire marshal. And so in the report that has been attached, you'll see that for the year 2020, we identified 864 state mandated inspections. And even with COVID occurring, of which we had an abrupt stop of all inspections until we were able to wrap our heads around exactly what we needed to accomplish and how we were going to accomplish it safely, we still were able to visit 856 of those properties. 8 of them we were not able to due to closures, or they just weren't accessible. But that's an amazing number. And then still on top of that, we went ahead and reported to you that we still completed another 329 business inspections. On top of that, those are not state mandated, but we do go out to perform safety inspections just to make sure that we have continued contact with the community and provide education and ensure safety services there. So it is a very simple report. We broke down into the different occupancy types so that you could see those numbers, which is in the very back with the graph. But other than that, pending any questions, basically it does take a board action, which is to approve a resolution with the numbers that I gave you.
You know, John, I just want to take this opportunity to thank you and all your staff. This is a remarkable achievement. I know not every jurisdiction is able to do this. We all know what gets inspected gets done. That this markedly increases the safety in our community, which ultimately translates into lives saved and whatnot. So thank you so much for all of your hard work on this.
Thank you, and I'll be sure to share that with the staff. They'll be happy to hear that. Thank you.
Okay. Virginia, did you have a comment?
Yeah, I'm just going to repeat or agree with what Jim said. John, please thank your staff. I mean, it was a tough year to be out there, and the essential workers. And I think sometimes people don't view y'all as essential workers compared to the firefighters who are always out there on the line dealing with the actual emergency. but you are. So thank you, and please thank your staff for all their hard work too. I mean, and if you want a motion, I can make a motion, Jim, to approve or to approve a resolution accepting the 2020 California State Fire Marshals or our Fire Marshal mandated inspections report.
All right, is there a second?
I'll second it.
Okay, Robert, seconds. Any further discussion?
Couple questions.
Chuck?
Yes, this in no way is any sort of comment on what you did, which I agree was excellent work. I'm curious, John, what it means when it couldn't be inspected. Did somebody come to the door and say you can't come in because of COVID, or what actually happened?
I'll have to look into each of those 8 ones specifically, but we did have some properties that's exactly what happened. Due to their nature, liability, whatever, they just said, we are not letting you in. And granted, we do have the ability to go in through other means, but we were respecting the conditions or whatever that may exist at the time, and take care of that through other means if needed, whether that's a virtual inspection. But for these 8, I'd have to look into them specifically to see what caused those 8 to not be inspected.
Well, I'm not asking you to do that, so don't misunderstand. I was just now.
I'm curious. So
we as the board are now responsible, just for the reasons you said, in terms of all that lax oversight of the property in Oakland and so forth. My question though is, what do we do now about that? Do we schedule a follow-up? What are you going to do for these 8 that wouldn't let you in?
Yeah, that's always a priority. At the end of each year, when we identify these, they become #1 priority to see how quickly we can perform an inspection or make a determination if they need to be removed off the list, because maybe they just don't exist, they close down. And we are going to be seeing quite a bit of that this year just due to the effects of COVID in businesses. So.
If you felt that there was something wrong going on, it was a marijuana grow house, or there was something else going on, would you follow up maybe with a police escort or something like that? Or how would you follow up on that?
Yeah, we have legal methods. We would obviously try to obtain consent, but if we have any reason to believe, then we would have to follow state law for a legal search warrant and do that with legal means.
Okay, thank you very much.
So John, did we put a new software tracking program into place last year?
Yeah, we've actually have a couple of new softwares that we are utilizing. So
could you speak just real briefly on your experience?
Yep. So the 2 of them that we have, so Streamline is a product that we're utilizing to take care of all of the engine company inspections, which does all the state mandate and what we call business inspections. So that software has been in use for 2 years now. We also have Excella, which is for our permit process. So now all of our customers can access us 24/7 and can apply for permits, upload all of their documents, and we can perform plan reviews fully digitally online and issue permits and schedule inspections all online now, which that's literally just came online fully in the last week and a half.
All right, well, thank you. All right, anything further for Chief Johnston? All right, well, thank you so much.
Thank you.
All right. The next item.
We need to do the roll call vote on that item, Director McLaughlin.
Pardon me. Thank you. Please go ahead, Michelle.
Director Crawley.
Aye.
Director Jones.
Aye.
Director Solano.
Aye.
Director Bernstein.
Aye.
And Director McLaughlin.
Aye. Thank you. All right. Brings us to item 10, the Draeger Swede Survival Simulator. Chief, are you discussing that one?
Yeah, I will. I'll start out. We have, Ken Babcock and Todd Ellis are also on the call, so they can unmute themselves if they'd like and answer, probably more accurately answer questions for you. But I did talk to legal counsel before this meeting on this topic, and one of the things that we both discussed, and I would hope you can make one modification to, is it says in an amount not to exceed $370,000. In discussion with Stephen about this, we think that should go up by about 10,000 just in case there's something that doesn't get covered, because if it's too low, then we have to come back to you. So typically there's either, you know, a contingency or whatever of 10,000, no different than a construction project. So there's a percentage or a number, but we would suggest doing that just in case. So if there's any other cost that comes up, we don't have to come back to the board with it. So I'd leave that with you first off. Secondly, what I want to say to this is, and I'll let these other guys speak more to it, this is a replacement. And this went through the finance committee as well. One of the things that Director Bernstein brought up, and certainly again, he can speak for himself, is why don't we amortize this no different than other things that we do? And it was a good point. When we first bought this prop 10 years ago, we didn't know how long it would last. And obviously it's had heavy use. So the one that we have is pretty much worn out. It's made out of metal and water constantly with fire and heat starts to warp and weaken. So we know that these things last about 10 years. So this is a replacement for, and a better replacement for the one that we currently have in there. Ironically, it's the same company, I believe, that we bought from the first time. And you can see they had a 3-vendor bid in here as well. So with that, I'll open it up to any questions that you might have. Again, you have Todd and Ken here to answer some of the specifics.
Rob?
Yeah, Chief, I saw that there were 2 other companies that were researched and they were more expensive than the unit that was settled on. Is there a reason why we went for the cheaper unit, or are the other 2 pretty much the same?
I'll let those guys answer that because they looked into the specifics of it.
So good evening, directors. One of the main differences is Draeger is in California, and the shipping cost for these things is large. So there's not a lot of companies that build these things up to NFPA standards and everything. So it just happens to be that Draeger is in Southern California, so our shipping costs are substantially less.
Okay, so there's really not that much of a difference in quality then?
Todd, did you hear that question?
I'm having, hold on a second. All right, can you hear me now?
Yeah.
Did you hear Director Solano's question?
What was the question?
Rob, could you repeat it?
Sure. So there isn't any pretty much difference in quality of the product other than the shipping costs?
No, I mean, we've been happy. We've worked with Draeger before. They came in less. And if you look at, I think in the bid, you guys can see how much shipping was. That's large. And you know, getting them from across the country, it just depends. But the quality, I think, is the same.
Okay. All right. All right. Thank you.
All right. Any other questions or comments? Virginia?
So Harold, I just want to make sure that I understand this. So now you want the not to exceed amount to be 380,000, correct?
Yeah, correct. In discussions, I had a meeting with Steve before this.
Yes, no, that's fine. I mean, I think this is a great training tool. I know that Councilwoman Hawkins Manulian from Atherton is on this call or in this meeting, and I think that we should show her the training facility at some point when it's safe to do so. I think it's an impressive training area that it's got a lot of great tools, and I mean, including like the rubble pile, and I mean that it's essential, I think. So I mean, I actually, Jim, would like to make the motion to authorize the fire chief to execute a contract with Draeger for a SWEED survival phase for live fire simulation in an amount not to exceed $380,000.
All right, is there a second?
Second.
Yeah, Rob, seconds. Any further discussion? All right, Michelle, would you call the vote?
Director Crawley?
Aye.
Director Jones?
Aye.
Director Solano?
Aye.
Director Bernstein?
Aye.
Director McLaughlin?
Aye. All right, well, thank you, Todd and Ken, for this and everything else you do with the training program. Thank you so much.
You're welcome. Thank you.
Thank you.
All right, next item. Chief, I think this is yours, the modular fire station and trailer that we've loaned to the city of Santa Rosa.
Yeah, so several years ago when this came up, the district was not going to use both the modular trailer that we had put in place for temporary quarters for Fire Station 2, and then also the awning cover that we had there. We've since, used an awning cover, a little bit different one at station at the house the house being used for Station 4, and we're using a house for Station 4, no different than what we did for Fire Station 6. They didn't get this project moved along as fast as they had hoped. They not only lost their primary fire station in the fire that they had 2 years ago, but they also lost their previous fire station, which was their backup facility. So they had nothing to work from. So the board very graciously offered them both of these items, the modular tent and the trailer unit. And they're asking that they be extended for another couple years so they can finish their project. As you know, this last fire season, they got hit again. At one point, I thought maybe the trailer and the tent had been burned over as well, but this time it did not get to that point. So, I've been a little busy up there for them, and, they need a little bit more time, and that's really what this is, extending that out. With Station 4 in play, I don't see a point right now where we're going to need this within the next 2 years. Certainly Station 1 is next on the radar. This would be helpful when we get to that project if we're going to build the station itself. For the other aspects of it, if you choose to move forward with a tower or a classroom, I don't think you'll need those right away. But we definitely, I'd been asked, can we just sell these? And the answer would be, I think you want to keep them. Number one, we spent the extra money in buying these to put in a sprinkler system. And number two, because the first place that we used them was in East Palo Alto. And at the time, the crew was worried about ballistic threat protection. So both of these units are equipped with ballistic panels in the walls, which is uncommon for any type of a trailer. So you wouldn't be able to duplicate that. So we spent a little bit more money for both of those items, sprinklers and ballistic panels. I think when we get it back, we want to keep it and use it at least for the rebuilding of Fire Station
1. Chief, does the city of Santa Rosa cover any transportation costs?
They would cover all the costs. They cover the costs when they picked them up. That was on them. And I believe in there as well, they cover all the costs to bring them back.
Okay. Any other questions or comments for the chief on this? Virginia?
Jim, thank you. So Harold, I know that there are provisions in here just in case, we need them back earlier than expected. And so I just want to make sure that they understand that that's the expectation, so that there's not going to be a problem. Yeah. Because, once you get stuck in those construction projects, it could be like, oh, well, we can't really give those up now, or we're almost done. And I agree. I don't foresee any major reason to have these back, but you just like with COVID, which is completely unexpected, the pandemic and the wildfires. I mean, who knows what else? I just want to be prepared. And I know we have provisions in there.
Correct.
But I just want to make sure that all of our expectations are this meeting of the minds thing. So well, they're more vulnerable than we are, I think.
Right. And I think they're very appreciative of, what you did. So I don't see that as a problem. Stephen certainly reviewed the legal aspects. I forget exactly what the question Director Bernstein had asked, but, legal counsel reviewed everything. And you're right, there are provisions in there if you need to get them back sooner than that. So I'll let him to speak to any, other legal questions. But yeah, they understand this was a kind gesture on the district's part to help another fire agency.
And I have no problem with, I'm glad we can help, but just in case, I just want to be prepared, Harold.
No, ultimately the district has to take care of itself, but they're great.
Yeah, I know. Yeah.
To your point, I don't think they had anticipated going longer than that. What happened was it took longer for the site abatement and cleanup issues to be resolved. So, that pushed the project back. And then of course, there was a run on general contractors, as you can imagine, with all the buildings that were burned. So they've run up against some real problems that they've had. And, I think it's the fair thing to do. They asked, we didn't see anything in the near future that we would need them for. And so they've asked for a little bit more time.
Thank you. Thanks.
Chuck?
I just wanted to follow up on the chief's comment. I had asked about whether they had insurance coverage and were responsible for maintaining them, and I was assured that they were responsible for that.
All right, can I get a motion to adopt the resolution?
So moved. I'll move to adopt the resolution to allow the chief to enter into to execute an amendment to the agreement with the City of Santa Rosa extending the loan of a modular temporary fire station trailer and apparatus tent through July 31st, 2023.
All right, is there a second?
Second.
Further discussion? All right, Michelle, could you call the roll?
Director Crawley?
Aye.
Director Jones?
Aye.
Director Solano?
Aye.
Director Bernstein?
Aye.
Director McLaughlin?
Aye. All right. Number 12, approve a request for proposal for an independent review of district-wide community preparedness services. Chief?
Yeah, so directors, this is a continuance of, what the committee brought up last year. We have new committee members, but with, Ryan's help and Andre's help, we tried to write a report and have it so that we could go out for RFP as was described last year. There was a variety of input from the new committee members. I'll let them speak for themselves, but I think it does address some of the earlier comments, the public comment regarding concerns about OEM and the value to the district in terms of internal operations and so forth. I think there is a wide variety of opinions and commentary that's out there. I don't know that I always agree with all of that because I see it from a different standpoint, but I think, inputting, having these three sections, one is the community, one is our partners, and one is the district itself, how it handles emergency operations and what can be done differently or better and cohesively with all three components is what we tried to input into this request for proposals. And I'll let the two directors speak for themselves. I thought we had a good discussion surrounding all three of these.
All right. Virginia, I believe you chair the committee, don't you?
I do. So first of all, I want to thank Harold, the chief and his staff for helping to put together a very comprehensive RFP, which is what I think that the board, I think Robert Jones, who's on the committee with me, we think that the board wanted to have a comprehensive RFP that addressed the governmental agency level, at the volunteer, the district volunteer level. And I added, Robert actually added a third category of inside or internal stakeholders, which I think is good. And so basically this RFP is asking to look at the program review in a 360 review format so that all the stakeholders that are broadly involved with the program of, the community preparedness as an overall goal is involved. So that's why it's going to be very broad. And the only thing that I was missing in here, and I don't know if we even talked about it, Robert, was that the RFP selection process should probably come back to the board. I think it normally does in concert with the chief. And then the committee can, or what did I say? Should the RFP selection process should come back to the committee, not first before it goes to the board. But I'm open to having it, the process to be whatever the board wants. But we just thought that that might be the same, but that might be simpler. But it's not in the RFP per se, but procedurally that might be the best way to do this. And I think that's normally how it's done anyway, going back to the committee and working with the chief on selecting the best vendor.
Robert, did you have any comments?
No, I think no comments. I think really Virginia kind of talked about it. I think I can't take all the credit for stakeholders. I think that was one of the things that Virginia brought up, but we were, I guess, comrades in crime on that. So,
all right.
Thank you, Robert. I thought it was a great discussion too, Jim.
Chuck?
I'll make a motion that the board approve the RFP for distribution, as well as Virginia's suggestion that it go when the come back
the
to
selection.
Yeah, come back to the committee before going to the whole board. I think it's a good idea. I thought it was a well-written RFP.
Okay, is there a second?
I'll second that, but we also have public comment.
Yeah,
Jim.
I was about to say I wanted to get the second first, and then
yeah, I'll second that.
Okay, then during our discussion phase here, I see Lynn Bramlett has something to contribute. So Michelle, can you bring her in?
Lynn, you're free to give your public comment.
Thank you. So I think the proposal looks very good too. I have a question regarding the statement in the chief's report at the beginning about the CERT team being the management structure of CERT, including both professional and volunteer resources. I'd like to see a published org chart that would include both the paid and volunteer managers, for example, who's on the training and communications team. So that's related to this topic, so I bring it up here. I agree that I think the potential firms, they should go to the E-Prep committee, and also that the selected firm would work directly with the fire board via the E-Prep committee to oversee the work. I do also want to say, on a related note, I think an educational session for the local elected officials would be important on the general topic of disaster preparedness. There are new council members in Menlo Park, there's some in Atherton, there may be some in East Palo Alto, and this is a broad and complex topic, and I think that would be very helpful here in general. So I will follow up with this particular idea, starting with the E-Prep committee. I've already given some thought to it. And I do want to apologize for leaving your meeting early. I'm actually in Colorado, so after this topic, I will be dialing out, much as I would prefer to stay on.
All right, well, thank you so much for your input, Lynn. All right, it's been moved and seconded. Any further discussion on this item?
Jim, one more item. So again, in discussion with legal counsel about this, one thing that he and I both discussed was the contract as shown in here is the one that was done for the city of Palo Alto. So just for clarity purposes, the one that we will use is not that format. So I didn't want anybody to be confused by that. Steve and I discussed it. That is not our format or our new format that we're using. That's the one that Palo Alto used. So if it looks different than that one, as you go forward, it's because this is somebody else's.
Right. So my understanding, Harold, was that Palo Alto contract was an example that you were giving to
correct. Yeah.
And people who want to bid. You
know, we're just so you know, as a general statement amongst all the RFPs and everything that we're doing, you know, working with Stephen, and I got to give, you know, them kudos on this. We've tried to go to one standard RFP format. We're trying to go to a standard contract format. So Stephen's been helping us with that, with the templates and so forth. So, you know, just bear with us. We're doing a lot of these, but we're trying, you know, it's new for everybody, but we're trying to make everything as standard as possible and use the same thing over and over again. So that's the goal.
Just so I'm clear, we're talking about it's page 114 or page 13 of 22.
Yeah, I believe that's it.
Sample agreement, part 3.
Stephen's the one who pointed it out to me, that he wanted to make sure that you guys knew this was not our format.
But that's correct, Director McLaughlin. The page 114, the sample agreement, is not the sample agreement that I suggest we include with the RFP.
Yeah, but the RFP that we see in our packet is unchanged. This is correct. Only that portion. Okay.
Correct.
Yes, that's correct.
All right. Any further discussion? All right. Michelle, could you call a vote?
Director Crawley?
Aye.
Director Jones?
Aye.
Director Solano?
Aye.
Director Bernstein?
Aye.
Director McLaughlin?
Aye. All right, very good. All right, item 13, approve the recommendation from the Fire Chief Ad Hoc Committee to select a search firm for the position of Fire Chief. I chair this ad hoc committee, so I will outline this for the board. We asked our counsel, Stephen Miller, to prepare an RFP, which he did and released it to the search firm community. We got 5 responses. Virginia and I met and went over those 5 and pared that down to 3. I asked Stephen to distribute the 3 top choices to you yesterday, and I hope you've had a chance to look at them. Virginia and I went through all of them in great detail and discussed them all in detail, and we independently came to Terry Black as our choice, and we're recommending that the board adopt that firm. I believe they quote a price of $22,000. I would like to ask the board to authorize an expenditure up to $50,000. The $22,000 is for the core services. The ad hoc committee will work with the selected search firm to develop, just what does the evaluation process look like? What does that assessment portion look like? There'll be costs associated with that over and above that amount that's quoted in the contract, and will be negotiated. The actual price will be negotiated as Virginia and I interact with them and develop the process. So, Virginia, is there anything you'd like to add to that?
Yeah, so I agree that this was definitely the ranking that Jim and I came up with. However, I also think that the other 2 firms were really good as well. So a lot of the references that we got, I thought were pretty good based on what was inside the response that we received. But some of the things, Harold, maybe you can help answer these questions. I know that some of these firms wrote that they had worked with us in the past, but they obviously didn't really talk about the positions that they worked for, to search for, except for the fire marshal. So can you give us some idea? I mean, because I know that for me, recommendations, or not recommendations, references that were put out there, did affect how I looked at things. There were some firms where the references, or, the people, the agencies they worked with, and I was like, oh, wow, I don't know if I really like what happened here. So, that kind of analysis went through my mind for at least one of the ones that was not chosen tonight to be in this group of 3.
Yeah, so I'll just share what I talked to you about when we spoke. But first off, I hope the district's going to be successful. So picking the right firm is obviously a key thing. The 3 that you've narrowed it down to are very well known. I would only differ on the one that you have written as you prefer. On one hand, which is that we have not had as much success with that firm based upon the last 2 HR hires that we had and the fire marshal search that we did. So, those are things where I'm sure, we did work together, and I think it was a good working relationship. But at the end of the day, the individuals that were hired, the issue behind how long those individuals stayed and what occurred kind of, you know, when you got them to the finish line, in the case of the fire marshal, that was not a good experience. And all of these firms, just so you know, will come in and they'll speak to people in your organization, and you know, they get their information as well. So they don't just ask for people to apply elsewhere, they'll reach out to them. And so they, you know, they also harvest from organizations. That's kind of how they do this. And it's not illegal. They can certainly, you know, as they talk to people, they see if they're ready to move up or move somewhere else. So, you know, I would be careful about that. And for that reason, when I spoke to Virginia about your #1 candidate there, I have some concerns. You know, maybe it'll all turn out. I think, again, the relationship was good. The experience and dealing them with was good. The outcomes weren't great, and there were problems along the way. We just dealt with Ralph Anderson. That was, I think, a pretty good experience on the deputy chief's position and so forth. I didn't manage that. Chief Stevens did. I haven't spoken to him about that. That might be something you want to do if you don't pick one tonight, or if you do, just know that's who we recently dealt with. But, you know, from my perspective, again, I hope you're going to be successful, and, you know, it's your choice. But, you know, again, this is the horse you ride is going to be the one that's going to do all the legwork for you.
All right, thank you for that. Virginia, did you have anything else?
So I just want to say that I thought that the firms were all, you know, pretty good in general. They were pretty equal. One of the things that I think that we need to consider is, and it's been an issue, but it shouldn't be the main issue, is, you know, diversity. And not that that's going to be the make or break, but and Jim knows this, I felt like the first two actually, you know, mentioned that in their request, their RFP. So that's why they were in my top two, but I don't want to bias any of the firms because I think they're all really great. But I would love to hear what others think as well.
Chuck?
I wanted to follow up, Chief, your comments here. And I don't want to get into the personal details here, but I want to ask you about the duration of people staying, because one of the things I don't like about search firms is that they cannibalize their own clients, and that's the base that they use. Let me say also, I think it's the fault of the agencies for not building in as part of their compensation system an incentive for not leaving, like a bonus for staying and things like that. I think that's up to a smart organization. I hope we're smart about that. But for whatever reason, public agencies tend to just give everything away to the candidates and not reserve anything for the public and their own agency. But let me ask you, is there evidence that in your comment that the people who left in this case, perhaps prematurely, were taken by the same search firm?
Yeah, that's correct.
Wow.
But
Harold, is that what you mean by they harvest?
Yeah, I wouldn't use cannibalize. I would say they harvest. I mean, they're, you know, look, they're going to come in, they're going to talk to your people, especially when they try and figure out certain positions that we have. And, you know, it's normal to talk to staff, right, about what maybe if you're doing an internal survey, what they're looking for. So they're developing those relationships, and during the period in which they're developing those relationships, they're doing assessments, and, you know, then later on that maybe turns into a phone call. There's nothing illegal about it. In fact, you know, it is the way that it's the nature of the business. I probably wasn't as up to speed on it when it happened to us, and it kind of it shocked me at first. I had to talk to a few people about it because I was angry, quite honestly. But, you know, it is the way that it goes. And, you know, to the warranty on people, and I'll just use this. I mean, you know, both the last two hires in HR were through the firm that you've spoken about, and, you know, both of those obviously didn't turn out, I think, as well as we had hoped. So, you know, and that's, maybe it's hit or miss, maybe it's the vendor. Like I said, we've had a good relationship with all of these three vendors along the time. We've used them all at various points or another, but yeah, that leaves a little bit of a distaste.
Was the fire marshal harvested also?
No, that was a all the way to the finish line and then a drop. So,
yeah, remember that, Chuck? We had 2 candidates and then one of them dropped, so we ended up having 1.
Right.
Oh.
I have
but that it wasn't stolen or anything by the.
No, but you know, the vetting, again, as you know, when you get through and you do all those things, it's certainly the individuals, any individual can opt out until the last moment. And so, you know, you can't put it all on the vendor, but I think, you know, with the vendor, what I do put on the vendor is making sure that you fully vet a candidate and work through all those things, especially if they're going to move from, you know, outside the area. And I thought that had been done. I think it got done to a point. I question it when that individual was going to come from essentially, you know, somewhere in the Central Valley and come here into the hottest housing, most expensive market with this, you know, anticipation of moving the entire family here. And I think it was really unrealistic, to be very honest with you.
Well, I have to say in that one case, I certainly don't like, you know, that seems a little sloppy, and I agree with your analysis of that. But I'll tell you, I think the district was the winner in terms of the fire marshal we ended up getting.
No doubt about that.
I know that was coincidental and serendipitous for us, Chuck, for sure.
Yeah, I think Robert, I believe you had a comment.
Yeah, well, it's a concern as well as a comment. And I want to really hear from you and Virginia as to why did you choose this company? What was, I didn't quite hear why you chose this company, the what is it, Terry Black Company or whatever it is, over the other two.
You know, for me, there were several things. The lead consultant that they'll put on this is the retired fire chief from Mountain View. The other 2 firms, it was the lead consultant did not have that background. I thought having a fire chief from the area that knows, you know, first of all, knows the job, knows the fire service, has held the position being selected. And also from our area, I thought that was a real advantage. And, you know, going down the list of clients that they had placed, I'm sorry, I don't have it in front of me, but there were some very notable hires: City of Los Angeles, I believe Tucson. And I won't go further than that because I'd get it wrong, but they were major departments, major cities had used Terry Black. I didn't find that to be the case with the other 2 to the same level. The number of candidates, you know, placed in the major departments. Those were the decisive figures for me. California-based company that you know knows California-based fire agencies, and I thought they were just in a position to provide a high level of service. And they were a full, you know, the full service agency, could provide the full range of selection services. So Virginia, so I'm sorry, Robert.
I said in your conversation, have you had a conversation with them? I assume you had a conversation with them.
I did not contact any of the firms directly. I went strictly by their
resumes,
their responses to the RFPs.
Yeah. So Robert, my take was very similar to Jim's, but then I learned about some of the, you know, possible challenges that we faced before. But like I said, like Jim said, actually, we came up with this order independent of each other, but I just learned of new information later that I didn't even get a chance to talk to Jim about. So I'm not saying that we shouldn't go with this recommendation. I just wanted to get all of the information out so that we can make the best decision. But I think going with any one of these firms would be fine. So I mean, I'm not worried that we're not going to pick a good partner to work with, Robert, if that makes sense.
Chuck, I see you, but I think Robert, I'm not sure Robert's done.
Oh no, I'll defer to Chuck because you already know my positions on this, so this whole issue. So go ahead, Chuck.
I want to make sure that I'm understanding the facts here because I'm looking here at the Ralph Anderson one, and on page 3 of the Ralph Anderson proposal, the last person on the list of recent recruitments, it says Menlo Park Fire Protection District, Fire Marshal 2014. But that's not Terry Black. Did we?
No, I'm not that's not Terry Black. Terry Black was involved with some of the other hires.
But I thought
so that for me, that's why Ralph Anderson was the third choice.
I just asked the chief. I was thinking that when the chief was talking about our first choice, he mentioned the fire marshal. Are we talking about separate recruits, or I mean, did Ralph Anderson get one and Terry Black got the other, or are we confounding several different problems here?
Yeah, Chuck, I don't want to confound any several problems. So I didn't have the chance to look at these in depth like you probably have. But if my memory is mistaken, then that would be the only thing on the fire marshal. I know we did use him for HR, so I may be mistaken saying that it's Ralph, that it wasn't Ralph Anderson's, because if that says that, then that would be correct. So there's another weight against that as well. I didn't look to Director McLaughlin's point about who was doing what. It was Virginia. I had a casual conversation.
But I did look, Harold, and I based my selection on some of this, but I didn't know what that additional information was until you and I talked today.
So I haven't looked to the merits of all the different firms other than, I know we've dealt with everyone, and I know that, again, with the one that you made as the primary, I recall that we had some issues there. So, if I'm wrong on the fire marshal, I'm wrong on it, but I didn't spend, to Director McLaughlin's point, I think he brings up a good point about, having a local fire chief involved. There's merits on all of it, but please don't think that I spent an in-depth time on this. When Virginia and I spoke, I just said to her that we'd had some issues with one of the vendors.
Rob, I see your hand up.
Yeah, to get back, do we have from our ad hoc committee, you and Virginia, an agreement as to what we need to go forward with, which one of these 3 firms?
Well, we recommended Terry Black.
Okay.
But Rob, that was what I'm saying, is that all of them would be good. I just got that additional information, which I thought that we should, at least put out there. But all 3 of them would be good. We did recommend Terry Black as the first choice. Okay. So yeah, but then the others would be fine too.
Rob?
Yeah, I'd like to make a motion to go forward with the Terry Black recommendation from our ad hoc committee.
I would ask that you, Rob, consider expanding that to grant the authority to spend up to $50,000.
Okay.
To do the other staff.
Okay.
The other staff.
And I'll add to spend up to $50,000 for the recruitment of the chief's position.
Right. I'll second that.
I got a question. Chuck, go ahead.
Any discussion?
Well, I would like to.
Discussion.
I would just like to request. Let me ask first. Jim, did you or Virginia speak in person to these to them, or you just reviewed the proposals?
It's strictly with the responses to the RFPs. I thought all 3 were pretty comprehensive. But no, I did not make phone calls to any of the firms.
Well, I would hope that you or Virginia or somebody would speak to Terry Black, assuming this passes and so forth. And at this point, I believe I will vote for it. But I would like somebody to talk to them about the chief's concern here and just see if there's anything else we should know about this before we actually finalize the contract.
So I would agree with
Jim?
that. Oh.
Yeah, Robert?
Yeah, I agree with Chuck. I'm kind of concerned at this point about two matters. One, when the applications came in, I thought it would be, we all would get the application at the same time. I don't know if you guys got it yesterday and came to your decisions about that. And if you did, then there's I think we need to kind of really look at this timing on that, because getting the applications yesterday to try to go through it, and then talking to you today, you haven't even talked to the people. You just went through it, did a paper sweep, and now you want to make a decision on it. I think that, and I'm not trying to, please don't get me wrong, I'm not trying to scold any of you. I'm just saying, looking at the process, hopefully in the future, moving forward, that if you to bring the board on board with, I think, everyone, and you don't necessarily have to have everyone, but at least, for me, in terms of a process, having a day notice to look at something of this magnitude, and it concerns me that whenever those applications came through that you should have sent it on to us immediately, so that we can look at it. And hopefully we can have some more questions or concerns, or some in-depth understanding of all three of them. And I would have expected that the ad hoc committee, to have looked at least talk to the individuals rather than doing a paper screen. Because anybody, whoever's can write good, can make everything sound good, but from yourself that, without talking to people to get a better feel for them, that sometimes you can be a little bit mistaken have a different answer than what the paper said. So I'm not comfortable with this whole process, but everybody got a voice in the vote. So
I just want to take the opportunity. Robert, thank you for that comments, and being involved in this process, leading this process, you raised fair questions. My thought is that any three of these firms could do the core job of making their notices in the trade publications. They may maintain a roster of potential candidates that they would reach out to. All the mechanics that go into a search, but that actual selection, will be the responsibility of the board. So I think, whatever the experience might have been in one individual search, I don't know that we wouldn't have received or wouldn't have experienced the same result with another firm. What I'm trying to say is, I take this process, so seriously. I don't think we'll do anything more important this year than go through the selection process. We'll use a firm to go through those mechanics, get the word out amongst potential candidates. But the next phase for me will be working with the firm and outlining what we're looking for in a chief, defining that selection process. What does that assessment process look like? And we will have input into that. And we're not guaranteed a result. We're not guaranteed that we will find a successful. We're not guaranteed that the candidate that is selected will perform to expectations. We'll certainly have that as our goal, but there's no guarantee to it. And I think the burden is on us. We've selected a firm, or we'll select a firm that will go through those mechanics, but the ultimate burden and decision will fall on us to go through the candidates. And I certainly reserve the prerogative of rejecting. If we're presented with candidates that we're not satisfied with, that we don't feel come up to our expectations, I have no problem acknowledging that and starting over. I hope we don't do that. But you know, I for one am prepared to restart if necessary. I think Rob, I think you were first, and then Virginia.
Yeah, thank you, Jim. Chief?
Yes, sir.
Which one would you choose?
Well, let me say this. All three are like the big auto firms. You know what I mean? They're all, you can't go wrong unless you get a bum car every once in a while, to Director McLaughlin's point. You know, I looked quickly, so I don't want to make it sound like it was some sort of comprehensive analysis, but I looked at Bob Murray and well-known, that would be the one I would pick. I think to the point of Ralph Anderson that we just used, you know, sometimes when you use a company on the recent end of it, you have a feel for them. We haven't used Bob Murray in a while, and I know we've had success with them in the past. So that's who I would pick, just from the standpoint of I thought they had a better presentation. But I don't want to go against what Director McLaughlin said either, to have a local fire chief in there for the reasons that he pointed out. I didn't spend probably 1/100th the time looking through this thing that he did. So, you know, that's a uneducated, you know, very little time spent just quickly looking at all three. To Director, you know, Jones's point, I got it. I looked at it real quick, and then, you know, when Virginia and I spoke about vendors and more, what was the up and down, there was some down on that one. But again, you can't. I don't want you to think that any one of these are duds. They're all very, very good companies, and I think it is up to the board to engage in that process and, you know, make them earn their money, make them do what you want them to do. They're all very capable of doing that.
Okay,
Virginia.
Yes, so I want to just address Robert's concern about ex parte communication. So Robert, I agree with you and Chuck, but I also believe that Jim and I were trying to make this process, at least the first part of the selection process, as fair as possible without having, you know, any standardized questions for us to even engage in conversations with these firms. You know, we really, I don't know, I think that we did the best that we could based on what we had or have, the information that we have. But I do think that this is probably the single most important decision that we will make, that's not just for this year, but for, you know, 10 years, right? And if Chuck, you and Robert think that we should maybe take a first pass interview with the top three and then come back to y'all, you know, in a special meeting or whatever, because we're very short on time. If, you know, we're looking at a 4-month period, then, you know, Jim and I could certainly do that. But, you know, but to be fair to all three, we would have to come up with standardized questions, which we did not do. But I think that since it's an important decision, maybe we should take the time to do that. Again, my concern with the new information that I got today was, you know, is that maybe we didn't do enough research. So if the board wants Jim and me to do more research with just these three firms, then, you know, that's something that we should consider too, because it's such an important decision. And it's not just going to be, like I said, not just for this year, but for 10 years down the road. And it's going to be a very public process at the end of the day, and we need to get it right. So I'm willing to take, you know, a little extra time to just kind of go through these conversations with the same questions for these three firms. But I don't want y'all to think that we're rushing through. I think what Jim and I are trying to do is make this as fair of a process as possible so that we're not biasing anyone here. I mean, wouldn't you say that's right, Jim?
Well, I'll come back to that in a moment. You know,
okay.
Chuck.
let me say, I'm not recommending that we take more time for this. And frankly, I think the standardized questions are a big waste of time. They're going to be these generalizable things. All I'm saying here is, and I'm prepared to support your recommendation, but here the chief has raised an issue about the last time they were used with regard to HR. I don't think there's we don't compromise fairness by going to the #1 recommendation and saying, we'd like to work with you, but we have a concern about something. Can you enlighten us about how that happens? In other words, and then if you have any qualms after that, to come back to the board and say, you know what, we'd like to change our first choice here. So that's
right. But the motion, Chuck, is to go with a firm with an extra 50, with an amount not, well, an increased amount to 50,000. That what you're saying is not what the motion is, in my opinion. We're being asked to make a decision tonight. And so we want to make a decision tonight.
We could always undo that decision.
What was that?
We could always undo
I believe Chuck has the floor. Chuck has the floor.
We could undo that decision in a matter of 24 hours or whatever it takes to call a special meeting. And I'm just saying, before we sign a contract, I would just like somebody to inquire about that. And if you feel reassured by the answer, fine. And if you change your mind, I'd like you to come back and have a special meeting where we change our choice.
Virginia?
No, I mean, I'm open to anything, but I mean, to me right now, I'm happy to do that, but I actually would feel more comfortable if we had to pick a firm today with my second choice. But I'm willing to go with what the board says. Like I said, all 3 firms are fine. But given the additional information, I would actually have to go with the second choice of Bob Murray.
Rob?
Yeah, I've had experiences with Bob Murray as a recruiter. Bob Murray's retired now, and Reagan Williams, who's one of their vice presidents, used to be, and I'm sure Harold knows Reagan, he used to be director of Sunnyvale Public Safety, which is fire and police agency. I mean, all 3 are competent. I mean, Reagan has a fire background, which is from Bob Murray. But the thing that really, I don't know, turns me a little bit is that looking at Menlo Park, when they were doing the recruitment for their city managers, it's always the same type of recruiting cycle where they bring in this, like if they originally do a search, then they bring in their other people that are favorites that come into the organization, which happened in Menlo Park and 3 other city managers that they did through Bob Murray. So, I'll go with your recommendation, Jim and Virginia. But as Chuck mentioned, we can pick someone tonight, and if they don't cut mustard, we can get rid of them. So thanks, Jim.
All right. Just some final thoughts, for me. All 3 of these firms offer the same menu of services. I believe they're all competent at what they do. Some of the issues that were raised with, one of the firms about employees that the district eventually hired. I think we're into internal matters now that once the recruiting firm has done their work and the employee is ours, I mean, that shifts to and is now an internal issue for us. And I don't know how that would change if that candidate came from us from company A, B, or C. Those same issues could exist from any one of those 3 candidates. I think we have to measure or keep our expectations in check that one firm will find that nugget, rather than a second one. It's whichever firm we select will present us with candidates, that it will be up to us to develop a assessment process to evaluate their qualifications and ability to do the job. And then ultimately it will be up to us. And I will just repeat myself, if we are not satisfied with the candidates presented, then we reject them and we start over. I hope we don't find ourselves with that, but there is no obligation created because we've been presented with candidates that we have to select one of those. And I think that same dynamic exists with whichever firm is selected. So that's all I have to say on the matter.
I got, Jim, if I may, I got one last thing to say and I'm done with it because I feel it seems like almost a deja vu here in terms of process. I think, and please don't get me wrong, if we're trying to create a fair process, if we're trying to create a way in which to evaluate and assess things fairly, then I think that should run across the board. And what's irritating me right now is that we are in this situation because I'm feeling that we really didn't get it. We really didn't create a fair process before we got here. But now that we're here, I'm saying we need to create a equitable and fair process of evaluating. Because if you ask me to vote on something, and I respect both of you in Virginia, but if you're asking an independent person like myself and the rest of us, the rest of the people, to be where you are in terms of your comfortability of the person that you have chosen, we all have to get, I have to get there. Maybe everybody else is there. I have to get there. And and the only thing I'm just saying is from moving from the day forward, we have to begin to look at a way of creating this fair and equitable situation of evaluating things and people and what we do, because we have been remiss in it so far, as I'm concerned, in selecting whether we move forward with a person or not. Anyway, that's my final comments on that.
All right, thank you. Any further discussion before we take a vote? Virginia?
Yeah, I just, look, I'll go, if we want to vote, if we want to go with Terry Black, that's fine. But I would feel more comfortable asking the questions and taking Chuck and Rob's suggestion of, kind of getting a little more information. Just because I think that our HR department has been a revolving door in the time I have been on this board for 9.5 years. And I have seen, and that's really what concerns me, because when I first got on this board, and Rob knows this because we got on the board together, we had some really difficult situations to deal with, including a contract with our firefighters after being basically at an impasse for 6 or 7 years before we even got there. And it was a very difficult time from an HR perspective. And there were different firms that were involved with helping us hire an HR professional. But one by one, I'm thinking like over the 9.5 years I've been on this board, we've probably had 2, 3, this is the 4th one. That's one every 2.5 years. And if Terry Black helped us recruit the HR professional for this function during all of these issues that we had with our, with our labor groups or bargaining units, I want to ask her or ask the firm about that. Because I think part of the problem that we are running into even now, thankfully we have Francine here, but then the fact that Francine's probably our 4th or 5th person in HR to head up that area is just concerning to me, not because of Francine, just because of, the situation we've been in. So I'm happy. That's not to say Terry Black wouldn't do a good job with the chief, and obviously the board would have the final say. But I do think that as a precautionary measure, we should ask the questions that Chuck, Robert, and Rob, suggested that we ask. Wow. I mean, I really, and I guess this is just from, I have this institutional history and knowledge of just going back to 9.5 years of being on this board, and how that HR professional, that HR function has been like a revolving door. So that's my biggest worry. And that's not to say it'll happen with the chief, but I think it's a fair comment that 3 of our board members, asked us to at least ask them,
Jim,
what they can do better.
Or Rob?
Yeah, I didn't ask for any more information other than.
I thought you went along with what.
I think Rob has the floor. Rob has the floor.
Yeah, please. No, I didn't want any more information other than the recommendation of what the ad hoc committee's recommendation was. And I was in favor of going forward with that. And I asked the chief, and the chief had a recommendation of Bob Murray. And so I'll be more than happy to go along with what the ad hoc committee's recommendation is. And if it's with Terry Black, I trust their judgment. And that's a pretty easy question, Virginia, that, the ad hoc can ask Terry Black, what happened with this HR selection process?
Right. That's what I'm just saying.
No, I mean, but it shouldn't hold up the situation relative to picking an HR manager, because they don't really control that. People apply for the position, they screen the positions, and it's the agency that picks the employee. So, I think all 3 are qualified, but I'm willing to go with what the ad hoc committee recommends. Thank you.
Any further discussion? I say we.
Yeah, I just want. Oh,
Virginia.
Yeah, I didn't, Rob. I'm not trying to put words in your mouth, but I thought it's exactly what you just said in terms of we can ask what went wrong or what happened or whatever. I mean, I just want to make sure that we get all the information before we sign on the dotted line. And maybe that's the difference between what you and I are thinking. But I was thinking that what you said was to get additional information. So I'm sorry that was not what you were thinking, and that I professed to say that you were thinking.
All right. Any further discussion before we take a vote on this? All right. Michelle, would you call the vote?
Director Crowley?
Can you please read the motion?
I can. The motion is to approve the recommendation from the ad hoc committee to select Terry Black and Company as a search firm for the fire chief position in an amount not to exceed $50,000. You ready for a roll call now?
Yes, please.
Okay. Director Crowley?
Oh God. Yes.
Director Jones?
No. No. Because I don't think we need to have, we already got a chief, we don't need another one. So that's it.
Director Solano?
Yes.
Director Bernstein?
Aye.
Director McLaughlin?
Aye. All right, well, thank you. Moving on to our next item, number 14.
Director McLaughlin, if I may, just to clarify what I think will happen next, and just to get the sense of the board if I'm going the wrong direction, since I'm the one who's sort of been on point for this RFP. I intend on letting the Terry Black Company know of this decision, and negotiating and entering into an agreement on behalf of the district to be signed by the fire chief, at which point we'll put the company in touch with the ad hoc committee to arrange the details for how the engagement is structured and how they meet with the full board to get their marching orders for next steps. Have I accurately got the sense of what the next steps in this process are?
Yeah, that's consistent with my understanding.
Great.
Does anyone else have a comment or a question for Stephen?
Well, when do we want to find out, or how do you want to deal with talking to Terry Black regarding, not to repeat the same situation, or, to find out what happened with the HR function?
I don't think that, I don't think that is part of the steps going forward. We can certainly, if once we engage them, if you want to have that conversation, Virginia, please. I mean, you're certainly free to do so. There may be some lessons there to be learned to apply to this search, but.
Well, okay. So basically what we're not going to do is what Chuck is suggesting that we do. Is that correct?
What the board just voted was to award a contract.
Yes,
to this firm.
I know. But what Chuck is saying is if we find out that, we aren't satisfied, we can have a special meeting in 24 hours and undo the contract. That's exactly what Director Bernstein said.
I think perhaps if Chuck wants to comment, Chuck should represent Chuck's view.
I think, yes, I'd like to always express my own views, but I think in this case, Virginia accurately said, I think we do need to have a conversation about what happened. And I don't know who the right person to have that conversation is, whether it's our general counsel or whether it's you, Jim. But I think somebody should at least ask about that and see if there's any comments. And if there were any reason, I'd like to put it in the hand. I don't, what should I say? I think Stephen's perfectly capable of doing this, but I think the person who's been making the recommendation and you're the chair of this, is you, Jim. And I think you should have the conversation. If you had any qualms, I think you should not go forward and you should call a special meeting to address it.
I will, as chair of the ad hoc, I will give you my assurance that we will discuss that specific issue with Terry Black as we engage them.
And that was just all the assurance I need. And I didn't mean to put words into your mouth, Chuck. That was my interpretation. So sorry, but I'm glad it was accurate. So how does that fit into this process?
It doesn't. I mean,
well, okay.
Well, it doesn't in the sense, I will ask Stephen Miller perhaps to repeat himself, but I think Stephen was talking about process and the actual contract. The discussion that you and I will have with Terry Black will reside within that process.
Yeah, but what if okay, so let me ask this question, Steve. If we enter into a contract and we find out that there are unsatisfactory answers to our questions, how easily can we get out of this contract?
I don't know the answer to that question. The district standard contracts allow for termination for convenience. I don't know the answer to your question. I heard the board just vote to award a contract to this firm now. So I'm
no, I understand.
Assuming that that's what you want to do.
Well, it is what we voted to do. It's a position we took. So, the assurance I gave is that we will discuss with Terry Black their experience in recruiting other candidates for the district in an effort to learn anything that, I think there was an idea of perhaps having a longevity incentive, a housing issue was brought up. We'll have those discussions with Terry Black. I think they're the same discussions that we would have had with any firm that we retained.
Jim, if I may, yeah. I think we need to have those discussions. But maybe for me to make me feel more comfortable, we need to have it before we enter into a contract. So the board has voted to enter into a contract, but I'm actually gonna, can I change my vote, Steve, to a no, because I don't feel comfortable entering into a contract without asking these questions first, and then not understanding how we can get out of the contract if we're not satisfied with the answers. So I would like to change my vote to a no. Not because I don't want Terry Black, but because I don't know what kind of situation we would be in if we needed to get out of the contract if we did not have satisfactory answers. So Michelle, how can I change my vote?
Virginia, please allow me, whether it's Michelle or Stephen, can you address the process for to accomplish what Virginia is asking to do?
Which thing, Jim?
To withdraw your I vote and vote against the motion that to retain Terry Black. What is the process to accomplish that?
So I don't know that there's a black and white answer, so I'm happy to hear what Michelle has to say. In my view, given that it was a 4-to-1 vote and that the change of Director Corrali's vote will not change the outcome of the motion,
right,
I would suggest that the vote stay as it was, 4-to-1, and that the minutes reflect Director Chen Corrali's request to change her vote. But if we start a precedent by which directors can change their votes after a vote, that is not a precedent that I think is a great place for this district to be in. So I think it's fine for the record to reflect this conversation, but I'm not sure it's a terrific idea to allow votes to be changed so easily.
I mean, yeah.
Well, Michelle? I just think the discussion didn't thoroughly happen. That was probably my fault for not pushing it.
Michelle, do you have any observations on this topic?
I was going to say that I agree with Stephen in that I'll note for the record that Director Corrali wishes to change her vote. However, it won't be official. But I'm not sure exactly how I'm going to word it yet, but I will note it in the records because it's not going to change the outcome of anything.
Right.
It's still
Chuck, I see your hand raised.
Yeah, I have two things. One is kind of a point of order here. I believe that Virginia can make a motion for reconsideration as long as she voted on the winning side, and that's a potential mechanism for changing the vote on something.
So she would have to have a second, is that right?
I'll defer to Stephen. I know that motion is part of parliamentary procedure, but I don't know beyond that level.
Let me go ahead and, would you like me to read that section from the board policy manual on reconsideration?
Please. Please.
Okay, so any board member who voted with the majority may move a reconsideration of any action at the same or next meeting. After a motion for reconsideration has once been acted upon, no other motion for reconsideration thereof shall be made without unanimous consent to the board. So.
That's correct. That's different from changing one's vote.
Correct. I'm not even sure that I can make a motion to reconsider right now for this meeting. It sounds like it'd have to be at a future meeting, or the next, not a future, the next meeting.
It could be the same meeting.
Oh, I thought it said future meeting or next meeting.
Same or next, I believe.
Oh, sorry, I missed that. Okay.
So Virginia, are you satisfied with the notation in the minutes?
Well, I mean, I would, it's going to win anyway, right? So if we did a motion to reconsider it, my official vote would actually be a no vote.
So are you satisfied with that being noted in the minutes?
What, that I voted yes, but I want to change my vote, or do I want to do a motion for reconsideration?
How would you like them to read? What would you like?
What
would you like them to read? How would you like them to read, Virginia?
No, I know, but Michelle was about to say something.
I was just going to say that how I would note it in the minutes.
Okay, I mean, that's fine. I mean, it passed anyway, so.
Yeah.
All right, so you're satisfied with the notation being made in the minutes?
I mean, if I'd like to make a motion for reconsideration, but I don't know if I have a second.
Are you making such a motion?
I'll make a motion for reconsideration.
Okay, is there a second?
I'll second the motion just to put it on the floor.
Okay.
All right. Any discussion?
I'll just say, I'll repeat myself once again. It's not that I'm against Terry Black. It's just that I think that if we're going to have a conversation with the firm about the concerns that we had with previous jobs that they have done for the fire district, we should have that conversation before we're locked into a contract, unless our attorney can tell us that getting out of a contract that we have been bound to and that we've accepted is not going to harm the fire district.
Okay. We have a motion and a second for reconsideration.
I have a question then for Stephen related to this. Stephen, if Jim has mentioned that he would talk to Terry Black about this item, does that somehow violate the prohibition on ex parte communication?
Certainly not.
Thank you.
And I mean, there's lots of ways there's lots of ways to skin a cat, and there's lots of ways to move this forward. But there's now a motion for reconsideration that's been made and seconded. By the way, that is not a motion to do anything other than undo what the motion you've already adopted. So it will wipe the slate clean, and you'll have to start this discussion anew about what to do next.
Hey, Jim.
But there's no reason why.
I mean, basically,
I'm not sure I totally understand what the concern is, but if Director McLaughlin does understand what the concern is, he's welcome to call Terry Black and discuss it. He and I could call together. We can send Terry Black an email and get a written response. There's all sorts of things that could be accomplished to try and get some resolution on the issue, assuming that there's agreement as to what the issue even is, which I'm not sure there is.
Yeah,
Steve, I guess my concern is that the motion, not the motion for, well, before we even have this discussion, I guess we should reconsider the motion so we can open up the discussion again. Is that what we're doing?
Yeah.
So I'm not done discussing, but I don't want to discuss unless we're able to do so at this point in the process.
I need to take a little pause here.
Okay, sorry, Jim.
Yeah, I need to take a little pause here. So the effect of voting to reconsider will essentially nullify what we just voted to put in place, awarding a contract to Terry Black, and we'd go back to square one. Is that correct, Stephen?
If the motion to reconsider passes, it will essentially undo the vote you've just done, and there will be no the award of a contract to Terry Black on the table. You may then choose, someone may make a motion to do something else, but that decision will have been undone.
Well, so can I?
Virginia?
Yeah, so I don't look at it as undoing the motion, undoing the decision. I'm looking at it as for reconsidering the motion as merely to finish off the discussion, because I think that we prematurely voted. We could actually make the same motion again. So this doesn't make the Terry Black decision, if we choose to go down that road, a dead end, right? For reconsideration. To me, it just allows me to ask more questions. I mean, I could vote for Terry Black again. I just am not satisfied with the answer from Steve that I don't know what the consequences are, that once we enter into a contract and we decide that we aren't satisfied with the answers that we received, based on past performance, that we're not going to be penalized for breaking a contract because we will have entered a contract. So I don't have a satisfactory answer, a legal answer to my question. Basically, Steve, we would be entering into a contract before, and then let's say we find extra information that we're not satisfied with. What are the penalties for breaking that contract versus having this discussion now and asking Terry Black these questions before we enter into a contract. I don't care if we enter into a contract or not with Terry Black. I'm happy to enter into a contract. It's a matter of when. Do we find out more information before we enter into a contract and we know that there's not going to be an acceptance of the offer, Virginia, in which case there won't be a penalty.
I think you posed a question to Stephen, and
yes, I'm posing a question to Stephen.
So let's give Stephen the opportunity to respond.
So the district standard contract template, which we would hope that Terry Black agrees to, but we have no way of knowing for sure because there is no contract yet. So you're asking what are the consequences of breaking a contract that does not yet exist? It's a question I can't answer. But if the district standard contract allows the district to terminate for convenience, and the penalty is to pay for those services rendered to the time of termination, plus any costs that the contractor is out for unwinding and bringing effect to that termination. So, but I don't know whether Terry Black will agree to those terms. They may be listening to this conversation and not interested in entering into any contract with the district at all, or on very different terms. I have no idea how to answer your question.
And I want to be, excuse me, Virginia, I want to make clarify a point here. Any discussion that I would have with Terry Black along the lines of what they've done in the past for us would not be to qualify or disqualify them. I'm satisfied they could do the job. I would have that discussion with them to help us in our process and our selection process. It would not be to disqualify them. It would be to learn how they arrived at a point and what lessons could we learn there. So that would be my purpose and intent, to ask questions surrounding, how did you select this candidate that you brought to us? This was our experience with that candidate. What lesson is to be learned? I would have that same discussion with any firm that we hired, to be clear. So we have a motion, we have a second. If there's...
Well, I do have a question for you, Jim. So since you were not here during the time we've had these experiences with Terry Black, I would ask that I be involved with asking those questions, because I actually have the experience that the problems that we've had with our HR department.
As a member of the ad hoc committee, you would be involved in that process.
So how would you envision that?
Once the firm is retained and we engage the firm in discussion about the evaluation process, during that phase, we could ask questions about their experience, share our experience with them, and that would help guide us in developing that evaluation process. That's what I envision.
So what if we're so I have one quick question for Steve. You said termination for convenience. What exactly does convenience mean?
Termination for convenience means that the district wishes to terminate the contract, not because of any bad actions by the contractor, but because it's to the district's convenience is the term that's used to terminate it, as opposed to termination for the breach or default by the contractor, where there's consequences that are very different. Does that answer your question?
Yeah, that helps.
Are we ready?
Jim, can we call for the vote?
Yeah, and this is for the motion.
Right, the motion to reconsider. Okay.
Harold has his hand up.
Yeah, I only want to say something because, again, I want you to make the right decision. This would be a relevant point. Francine's not as listening to the conversation, but she just pointed out something to me that I was not aware of, but I think you would want to be aware of it. So Redwood City is also searching for a fire chief, and they hired Terry Black. So our neighbor is using the same vendor. Take that for what you will, but it's a relevant fact that I know if I was going to make a decision on a vendor, I would probably be looking at. So I just offer that up. Good or bad, your decision, but just know they're working with our neighbors next door for the position of fire chief.
Okay, thank you for that. Michelle, would you call the vote, please?
Director Crawley?
This is for the motion to reconsider.
It was your motion.
Yes, and just to be clear, yes, a yes vote is yes to reconsider, and a no vote is no, let the prior motion stand.
Aye.
Director Jones?
Sustain.
I'm sorry, what?
I sustain.
Abstain?
Abstain,
Oh,
sorry.
thank you, thank you. I couldn't hear you. Director Solano?
Nay.
Director Bernstein?
Nay.
I'm sorry, Director Bernstein, you said no, yes?
That's correct.
Thank you.
Yeah.
Director McLaughlin?
No.
Thank you.
Thank you. Thanks for letting me say my piece.
All right, thank you. Moving on to item 14. Review progress in conducting a comprehensive financial analysis of the Menlo Park Fire Protection District Certificates of Participation Series 2009B. I asked Michelle to place this item on the agenda. This is an issue that has been in play now for several months. It's been before the board at least twice, the Finance Committee at least twice. So there was no staff report included in the packet. So Chief, I don't know if you'll speak to this.
Speak to that if you'd like.
Pardon me. Kathy, before you say something, hey, Director, I think one thing I failed to share with you, and I was reminded of it today. So this item was on the Finance Committee agenda, but unfortunately the committee ran out of time and was unable to address this item during the Finance Committee meeting. And that's why the directors also suggested it come back to the board. So then I'll turn it over to Kathy from there.
Right. Kathleen?
So I think that what I was looking for at the Finance Committee was direction on what exactly it is that you want, because I have, like, for example, 3 different vendors that have offered to do refunding of that issue already without paying them. But I think I got the impression that maybe you wanted more, some type of other analysis as well as that. Director Bernstein, did you have any input on that?
Well, I do, but why don't you finish? I mean, explain.
Okay, so I started doing the original for an FA, which is strictly going to refund or pay off the current debt, the 2009 Bs. We can do it. So then got the impression that we actually wanted more financial analysis to be done. And so I'm at a standstill waiting for direction on what it is the board wants from this RFP.
Chuck, before you, I'm sorry, were you done, Kathleen?
Yes, thank you.
I think the board, let me speak for myself here. There's the think recalling these bonds. I think I've been over this a couple of times now. That's one issue. Can it be done? How would it be done? What are the mechanics? And then separate and apart from that is the financial analysis that goes with, do we replace the bonds? Do we need to? What would the effect be on the district's overall financial position?
It's all falling.
Pardon me, Kathleen.
Sorry.
Those were, the questions that I think have been articulated in prior meetings, and I think that was discussed in the Finance Committee as well. So that's what I'm looking for in a financial analysis on this issue. So, Chuck, did you want to speak to this? Or?
Well, yes, and let me say the chief is absolutely right. We did not get to this at the Finance Committee meeting, and that was to a large extent my fault because I had lots of comments and things on some other issues, and we took a lot of time at the meeting to go over that. But I would like to see us perhaps shortcut this whole thing. And it seems to me that we don't need an RFP to do this, that might be an unnecessary step in this that will just take us 2 or 3 months, and we're losing anywhere $40,000 to $50,000 a month. I think this requires a speedier action. I had prepared some questions and so forth to discuss at the Finance Committee meeting. What I'd like to do now is actually present them in the form of a motion. So I'm going to make a motion about how I think we should best proceed, really just to shortcut this whole thing, save some money, and clearly articulate, at least this is my perspective, on the kinds of things that we should know and could know very quickly from a financial consultant. So I've actually sent this, I had prepared this before, and I sent this to Michelle. Michelle, are you able to show the motion that I'm going to make at this point? So,
yes. Can you see it?
Yeah, can you enlarge it at all?
Move all the people over and I'll get bigger.
Wait, what?
For Director Bernstein, if he moves the people.
I have a copy, so I can read it. If you can see it.
Can everybody see it on the screen?
Yes.
Okay.
Okay.
Yes.
So my rationale is to help reduce the interest costs on the Fire District Series B COPs. It is essential that we engage as soon as possible a financial consultant to assist us in decision-making regarding our Series B COPs. Therefore, I make a motion that the board authorize our district general counsel to secure the services of a qualified financial consultant with expertise in COPs to conduct a review of our situation and then meet with both the Finance Committee and the board as a whole to answer the following questions. And these are the questions that I think could be done relatively quickly. I'm talking about in a matter of a couple of weeks. So of immediate interest, are the Series B bonds redeemable? As of what date? What is or are the sources of the information? Number 2, does the fire district have the cash to redeem the Series B bonds? Would a cash redemption jeopardize the district's budget or finances? Question 3, should the district consider refinancing the existing bonds at a lower interest rate in order to maintain the district's current cash position? 4, what is the consultant's recommendation regarding the district's next steps regarding its Series B bonds? And then of more general and perhaps longer term interest, number 1, it appears that the Series A bonds and the Series B bonds were sold under the same terms. Is that true? Did the redemption terms of the Series A bonds differ from those of the Series B? When is the earliest date that the Series A bonds could have been redeemed? Number 2, if the Series B bonds could have been redeemed earlier, how much total interest did the district pay from the earliest date to today? After considering the federal subsidy, how much interest did the district pay from the earliest date to today? Number 3, if the Series A bonds could have been redeemed earlier than they were, how much total interest did the district pay from the earliest date to the date they were redeemed? Was the federal subsidy applicable to the Series A bonds? If so, after considering the federal subsidy, how much interest did the district pay from the earliest date to the date they were redeemed? And 4, are the documents pertaining to the sale of Series A and Series B bonds defective or unclear in any way? Is there any reason that the terms are confusing or would otherwise be difficult to interpret? So I think this would give us, that's my motion.
So I'll second the motion to start the discussion.
I'd like to say that in doing this, I think we get all the facts. I think we get them for a relatively you know.
Excuse me, Chuck, if I could just stop you for a moment. I believe you've made a motion.
And I seconded it.
So you're seconding Chuck's motion as presented.
Yeah, mainly also to get the discussion going.
Okay, I just want to get that.
Yeah.
Okay, so is there any discussion? It's been moved and seconded. Is there any discussion?
Chuck, did you have something to say?
Yeah, I'd like to, perhaps, Chuck, if I could just ask, your indulgence to allow Stephen Miller to address the motion that's been made.
So just a question. I see that the motion authorizes me to secure the services, and I wonder, I sort of feel that I'm happy to help facilitate this process. Whoever is hired is going to work closely with our Director of Finance, Kathy Jackson, and I think I'd feel more comfortable, frankly, in a role supporting her efforts in answering these questions and securing a financial analyst to do that. It's going to be a district-led effort. It's not clear to me from your motion whether you want to secure the services through the district's procurement policies or through some direct uncompetitive process, but in either event, I'm not comfortable doing this on my own. I lack the expertise to pick the right financial analysis and analyst, and would need to work with Kathy Jackson on this.
All right, thank you. Chuck, did you?
Well, I was under the impression that you had helped us secure the services of some search consultants. I thought you had done a good job. So it was acknowledging your knowledge of professionals in these fields that I was relying on. If there's a better way to do that, I'm certainly not opposed to that. I think we should always do what we do in accordance with our purchasing policies. My understanding was that we could secure the services of a consultant without having to resort to an RFP. And I may be wrong about that, but that was my understanding.
So I think assuming that the value of the contract would be less than $100,000, your policy would allow you to use an informal process by which you would solicit proposals from at least 3 qualified vendors and then award a contract to the best suited firm. I know I'm very good at procurement. I can help develop the request for quotes from these firms. I have a list of firms that I've shared with Kathy, but Kathy's really the person who's going to be essential in recommending the right firm for the board to select and being part of the process and in translating these questions into a scope of work. So I don't mean to, I'm glad that you think I was good at seeking at the request for proposal for the search firm.
I'd like to divide the discussion into 2 areas right now. The content of the motion would be one, and the second would be the vehicle to get there. So if we could take the first one first and discuss the contents of the motion, and then separately we'll consider the issue of procurement of those services. So is there any discussion on the contents of Chuck's motion? Virginia? Yeah. Virginia?
When you say content, do you actually mean whether or not to hire a financial advisor? What do you mean by content? Because to me, the rest of it is content. I think you're right in dividing the question.
Okay, and let me respond to your question. The content of the scope and nature of the review, and then separately and apart, the procurement of the professional services to accomplish that.
Okay, so do you want to divide the question?
I think I just did. So
no, I think you have to make a motion, right, to divide the question?
No,
so
there's been a motion, it's been seconded, so we're discussing. So to try to bring some framework to that discussion, I would like to have discussed the content, the scope, the nature of the review of the bonds, and then separate and apart from that, securing the professional services to perform the work. So is there any discussion on the contents of Chuck's motion? The nature, scope, extent of the examination of the bonds.
You have a hand raised with Robert.
Go ahead, Kathy. You had yours up.
No, pardon me. Virginia had the floor, and if Virginia is not done, we'll move on.
Yeah, I just want to clarify, Jim. When you say content, you're talking about the two parts: immediate interest and general interest, right?
Yes, the contents.
Okay, okay. And then whether or not we should hire someone at all, is that the other side?
No.
Okay. What's the other, what's
the mechanics of hiring professional services?
Okay, the process, the procedures that we would take. Who would help with the procurement? Okay, got it.
Yes.
Okay, thank you.
Robert?
The two questions. One, what's on the agenda and what Chuck just outlined. It seemed like it's going down the same road. You're trying to find someone to analyze these bonds. So, if anything, I make a motion to hire someone to analyze these bonds, so we can get that question out of the way, and that the finance committee can load up with the consultant all these questions in the RFP for that particular consultant to answer these questions, so we can get it out of the way. Because I think without hearing from Kathy, she probably could have given all the answers that's most of them from there, and those that not, they probably could go into this request for proposal. But let's not drive this thing further than where it really needs to go, so we can get it out of the way, so we can have the answer that people want. Because all these other questions, most of the questions, I'm not comfortable with most stuff Chuck got there, so I'm not sure what the investigation is about. Where there's improprieties is going on. If that's the case, then let's call it what it is. If it's not, it would just answer your general question, Jim, in terms of understand what those bonds are, how can it benefit us moving forward, or some similar. Let's deal with that. Whether it was done wrong or not, I mean, who we gonna fault for it? I mean, let's not go into that stuff. Anyway, that's my comments.
Kathleen, did you have anything to add?
No, thank you.
All right. So now we're turning our attentions to the mechanics of hiring the professional to do this type of analysis. Is there any discussion on that topic? Virginia?
Just actually a question for Chuck. So Chuck, how do you think Kathy can help us with hiring a financial advisor? I mean, you went straight to the general counsel instead of going to our financial expert or administrative manager here.
May I answer, Jim?
Please, Chuck.
Well, I certainly didn't mean to bypass Kathy, but we communicate with the chief, and the chief then would delegate this, and I didn't feel that I should be interfering in the chain of command here, but I felt that it was appropriate to go to the general counsel. And I think, again, because I thought he had facilitated the proposals for the search firm, and I think his idea of conferring with Kathy and the chief and so forth makes sense. I also know that our procurement procedures are something that are still up in the air and that he's working on ways to do that. And so I wanted to take it out of our hands, and I didn't want to put it into a staff person's hand who isn't really authorized to do procurement in a different way. So I just didn't feel like I wanted to put Kathy in jeopardy about how we did this. So that's why it is where it is. But I'm happy to adjust it in any way that would seem appropriate. And I think I'd like to be guided by Kathy and Stephen and even the chief here.
I'd like to share my thoughts on this. I think we've waited several months to get this effort underway, and we haven't crossed that threshold question of, can these bonds be redeemed? What's the advisability of doing so? So there are those threshold issues. Assuming that they can be, again, I go back to the core issue for me. We've got 7.25% bonds out there that we're paying on in a 1% world. So there is a price tag attached to this. And I don't want to delay the process any more than it's already been. And if that is to, our procurement policy permits us to retain professional services without going through an RFP process. So I support Chuck's interest in doing this in the most expedient manner possible.
So Jim, through the chair, I agree, but I also think we need to be very mindful of our procurement process. So Steve and Kathy, what's the best way to approach this where we're doing everything above board, which we need to do and we should do, while also understanding that each day, we're dealing with a 7.25 coupon in a 1% world, or even less than 1% world, that it's money just sitting that we're wasting.
I have 3 high-level FAs right now that I could write to first thing to ask them to update what they have given me at this point, which is refunding issues, way to do refundings, different ideas for the refundings. They can't say whether we have cash to pay it off. That would be more along the lines of what the board would have to decide. Do you want to put funds towards the payoff of CalPERS, or do you want to put it towards this? They could refund it. They would do it at a lower rate. And like I said, I know 3 off the bat: PFM, KNN, and the other one was Stifel, that I actually have their proposals in my hand to refund or whatever we want. So if I want to reach back out to them, say, please give me updated numbers, and we can make that decision by the next finance committee.
But the procurement of those services would be done how, Kathleen? Would
when those are done, they get paid a fee that's included in the interest rate, depending on if they're going to refund.
Considering our procurement process for professional services, what does that look like?
Number one, it would be under 100,000.
Okay, so is it the informal process where you simply?
Yes, it's the informal.
Okay,
so out to 3 people.
All right.
Jim?
Yes, Virginia.
So I have a quick question for Chuck and for Kathy with regard to, so I think that we can do this, but I want to make sure that what you're talking about, Kathy, is refunding, which is not the same thing as a cash redemption, but I'm looking at what you've written here, Chuck, and I don't see refunding in here. And I can't see the bottom part of the general interest comments. So where is refunding in here? Because I do think that refunding has to be an option, like what Kathy said, and I can't read the last 2 bullets or 2 numbers of under general interest, and I don't see refunding
in here.
I believe Chuck refers to them as redeemable.
Yeah, but that's not the same thing as refunding, Jim. That's what I'm saying. It's a very different thing from what Kathy's saying.
Yeah. But in order to be refundable, they have to be redeemable. So they are.
Right, but refunding is not the same thing.
No, but in order to refund, they have to be redeemable.
Yeah, but they can be redeemable and we don't have to do refunding.
Correct.
Right, and so the question is, do we want to refund or do refunding? I mean, I understand the redeemability of something, but if refunding is not in here, then what you're doing in terms of asking about refunding makes no sense. So do you want refunding in here, Chuck, or not?
Are the Series B bonds redeemable?
My proposal is to hire a financial analyst who can tell us what the situation is and make a recommendation what we should do. One possibility would be to do nothing. Another possibility would be to take cash out of our bank and pay off these bonds and do nothing more. A third possibility would be to refinance these bonds, which Kathy is calling refunding. I don't happen to think that that's the right solution, but I think we ought to look at all the possibilities. The fourth thing is, if we had a capital budget and if we knew that we needed $50 million, maybe we should be going out and looking to issue bonds for $50 million to do all of our projects, rather than getting $8 million just to give the money to investors again, which to me doesn't make any sense at all, but it's a possibility. That's why I think we need a financial analyst. The people who want to refund it, they shouldn't charge us anything. They get a fee. So it wouldn't cost us anything.
That's what I said.
Pardon me?
That's what I had said.
Yeah, but they have a self-interest. I mean, that's not where you get unbiased information. You get unbiased information from a financial analyst who's not selling anything and not a bank trying to refinance it and so forth.
Okay.
That's what we need.
Then I think it is a different direction than just getting a FA, a financial advisor, is what I call an FA, because that's what they're called. These people from PFM and Stifel and wherever else, KNN, that's what they do. But I'd probably have to put out an RFP to get, to have them looking at our capital and our cash flow and what would be the best way to spend that.
Well, let me ask the question of Stephen. Stephen, are you familiar with people who could serve as an objective financial analyst and who are not selling a product?
So my understanding is that the financial advisors who get paid from the proceeds of a refinancing nonetheless have a fiduciary duty, pretty sacred fiduciary duty to the agency to give good advice. But I think that Kathy's suggestion that the financial advisor inevitably will be repaid out of the proceeds of the financing is the way it's usually done. All of these firms will be happy to provide services, consulting services at an hourly rate if the district prefers to pay in that fashion.
Well, let me say again, I think that these are all the wrong firms. I think we need a financial analyst. There are consulting firms. I worked for one. I'm not recommending anybody, but I worked for one. I know they exist, and they don't get paid for. They're not a bank. They're not a brokerage. They don't get paid for doing something else. They simply do the analysis, and you pay them for that. And it's one of these things that, if all they do is refinance loans, that's all we're going to hear about. And I don't think that's the right answer, frankly, for the district. And I don't think we should go to an expert. I don't care what they're called. I mean, when I lived in Chicago, I was born in Chicago. I mean, the mob are called financial analysts. It doesn't matter. I still wouldn't hire the mob. We don't want people who are self-interested in their one product. And
okay, that's fine. I suggest doing an RFP then with all the components.
I don't think we want to wait for an RFP. I think we want to hire a firm that can do financial analysis and get the answers by our next meeting. I don't think we can wait.
Can I ask one question? What is the purpose behind number 4?
Which number 4?
At the bottom. I can't read it. It's on the bottom.
Well,
Michelle, if you could scroll it down. I don't think the screen shows anything.
Or is there any way that Michelle can email it to us too?
You can scroll down on that, Michelle, and cut off the top.
Yeah, that's true.
I don't know how evident.
I don't know if Michelle is there or not. You know, Chuck, could you read number 4 under general interest?
Number 4 is, are the documents pertaining to the sale of Series A and Series B bonds defective or unclear in any way? Is there any reason that the terms are confusing or would otherwise be difficult to interpret? And let me address, reading this one, let me address Robert's concern about possible wrongdoing. I don't know. I'd like to know. I believe the district has wasted probably $2 million on this. And I would hope that the board would care about having lost a couple $1 million. I would hope that that was something that was important enough that we would at least get the facts on it. If the facts show that everything was fine, that's fine. But we know that it wasn't done correctly, and we ought to find out why. Was there any intent? And believe me, people would kill over $2 million. So why wouldn't somebody do something a little bit shady to make $2 million? We ought to know that. And I think as guardians of the public's funds, we have a duty to at least look into it and inquire of a professional and not gloss over it because it might be a little ugly or it might be a little embarrassing. I think we have a higher fiduciary duty than that. And that's why I'd like to have an objective view of this whole thing.
Oh, Chuck, just Jim, if I may, I'm not trying to make light of anything contrary to what you are implicating with me. My point, and it's always the point, is that you keep saying that you know, and I just want you to produce your evidence of what you know. If you are speculating, then say I'm speculating. I would like to know. You don't know, but you keep saying that what you know. So I am perfectly okay at spending money to find out if these bonds are valuable or not. You know, I don't have any problem in spending money, but to add all these other things in it, you know, that's the way you structure it. So don't tell folks or give me the impression that I don't know what I'm talking about. And that's what I'm sensing from you when every time I make a statement about, you know, about what you're saying, that I don't know what I'm talking about. So
I certainly didn't mean to imply, and I don't believe I said that you didn't know something. I think that all of us don't know what happened here, and I for one would like to find out what happened.
All right, I'd like to take stock of where we're at with this. You know, the motion, you know, that you've outlined here, Chuck. You know, can a financial analyst address these issues? And well, let me back up. It speaks for itself. So do we have a process in place? Does our procurement policy, you know, enable us to secure the professional services to address these issues? I don't know if it's the three that, you know, that Kathleen has suggested. And I'll ask Kathleen, the three firms that you have suggested, do they have the capacity to address the issues outlined in Chuck's motion?
I don't know. I've never used them for this, so I could not tell you.
Well, then
EFM probably.
Wouldn't we be going into the marketplace again with our procurement?
Yes.
Policy allows us to. So, you know, you would go to three competent firms and present this motion to them, say, do you have the ability to address these issues for us, right? And then you'd address three firms, get your 3 bids, and then select one. Is that essentially the process?
Yes.
All right. So I think, you know, we started out here on those 2 tracks. One, you know, the content of Chuck's motion, and then 2, the procurement policy. So I think I think we've addressed those 2 issues. Is there any further discussion? You know, again, I would remind you that we have a motion and a second.
Yeah, but Jim, can I just, okay, so are we doing the RFP process?
No, we would not be doing the RFP process. We would be utilizing our procurement policy that allows us to procure professional services with 3 informal bids. That policy is in place now, and we use it, you know, we use it now. So we would be following that same process. We're not creating a new process. We're not creating new policy.
No, I know, but are we making it not as transparent? Because we might be rushing this and not going through the normal public process. And I don't know, I'm just asking. I mean, I don't want the staff.
Well, if you're asking my opinion, no, this is completely transparent. It's fully transparent and conforms to our current practices and policies.
So Kathleen, does it?
I think it's, yeah, it does follow our policy. Yes, thank you.
Are you comfortable with working within those parameters? Because you're going to probably be involved with this.
Yes.
All right, Chuck, with the discussion that has occurred on the procurement end of this, do you want to revise your motion to conform to that discussion that we've had, that Stephen would work with Kathleen to go into the marketplace, you know, present, you know, the items contained in your motion and secure the professional services to address these issues?
Yes, I believe I could do that with the addition of 4 words. May I do that? I need the.
Please.
Okay.
So you're amending your motion.
I'd like to amend my motion, yes, with the addition of 4 words. And Michelle, are you there to be able to note these?
I'm here and I'm all ears.
In the second paragraph, in the first line, between the words "to" and "secure," you see where I am?
Yes.
I'd like to add the word "oversee a procurement process to," oops, that's 5 words, sorry. So those are the 5 words: oversee a procurement process to secure the services of a qualified financial consultant.
Got it.
Right. So Chuck has amended his motion. Do we need a new second?
Well, I need to know if the seconder would approve the addition of those.
Well, I want to, okay, so can you please read them? Yeah, you would need a new second, but Michelle, can you please read the amended motion?
Do I have to read the whole thing or can I just read that?
No, just just that one paragraph.
Okay. Yeah. That the board authorize our district's general counsel to oversee a procurement process to secure the services of a qualified financial consultant with expertise in COPs to conduct a review of our situation and then meet with both the finance committee and the board as a whole to answer the following questions. And we all know what those are.
So I do have a question, Jim.
Please.
If I may.
Yes.
So Chuck, does it have to be the general counsel?
Make your point. Why not?
Because I don't know. I mean, because this makes it look like that the general counsel alone is doing this, and that's not the case. The general counsel be working with our staff on this.
If you want to add the words instead of work with staff is fine. That's why I said oversee. You don't oversee nobody.
Yeah, but the general counsel is not going to oversee Kathy, is he? The general counsel works for us.
I was just trying to simplify. So if you don't want a second.
No, it's not that I don't want a second. I just don't know if general counsel.
To argue that, maybe you could ask for us another second if there is one, Jim.
Okay, is there a second to Chuck's revised motion?
I'll second it.
Rob, so we have a motion and a second. Any discussion?
Yeah, I'd like to finish the discussion I started before I was interrupted, but yes. So are you saying that where does Kathy fit into this process?
I think we've already discussed that. I think
no, not in this motion. We have not discussed how our staff fits into this motion, because right now it looks like our general counsel is giving guidance and direction to our staff. That's what this motion looks like to me. And if that's your intent, then please let me know. Otherwise, I'm not sure that I understand what your intent is in terms of bringing staff here.
My intent was to follow the recommendation or that Stephen had, that he would work with Kathy.
But Kathy's not a party to this motion.
I don't delegate work to staff, and I'm not going to give any more explanations of it.
You're not. You're giving an explanation to a board member who's being asked to vote yay or nay on this. So I'm not asking you to delegate to staff. I'm asking you to clarify the motion.
Well, I wasn't making the motion regarding any staff. I just wanted to ask our general counsel to follow the procurement, the procedure that he recommended, which would be.
Yeah, but our staff would have to follow the same procedure. I don't think our general counsel should be giving direction to our staff. It's
Virginia. I think we've moved into the area of argument. I think you've asked Chuck a question, he's responded to it, and I think now this is just argument.
No, I just want clarity. I'm not against the motion, but I think that our staff has to be somewhere in this motion, where our direction should be to staff.
Well, and I will share my view of the motion. I'm not making any attempt to speak for Chuck. The general counsel would bring, perhaps he knows some firms that could do this type of work. He would oversee a process. The process includes is our staff, is the process.
That's not clear in this motion.
Well, and if it's not clear to you, then it
doesn't matter, Jim. I was elected to this board too.
Virginia, you interrupted me. Then I cannot speak for Chuck, and I just offered my understanding of Chuck's motion. You've asked Chuck several times. He's answered you, and
no, he hasn't.
He has. Perhaps not to your satisfaction or your understanding, but he has answered you. So I would ask if there's, I don't know where you want to go with this now. You're free to vote for it or not vote for it based on what
I heard our general counsel say he wasn't necessarily comfortable in helping us find someone.
Then if you have a question for counsel, then please ask him, and perhaps he can satisfy your curiosity.
Jim.
I think Robert was first there.
Actually, it was Rob that said Jim first. So
okay, Rob.
Well, I'd like to call the question.
All right, you're going to have to help me out there. Does that?
You have to make a motion to call for the question.
And we have a second. Okay. Are we going to have any? Well, Robert would like to speak. Robert, go ahead and speak, please.
I just like to know from Chuck, is this what you're passing on this motion, did it go to the finance committee? Has the finance committee sifted through this particular motion, or is this just your motion as a board member outside of a finance committee?
Well, I can tell you this did not get discussed.
Virginia, I believe Robert addressed the question to Chuck, and Chuck should be given the opportunity to respond.
Okay.
This was not a product of the finance committee discussion.
Well, if I may, I thought we had a protocol that anything that related to the things that for a committee, because I think if I heard you, Jim, last month, that this item got referred to the finance committee, and the finance committee, and I thought we voted on that, or talked about it, and that the finance committee would look into address and try to come up with the solutions that seem like this motion, this one-page motion, is all about. So are we going to follow protocol, or are we just going to just go like the Wild West and just start firing off anytime we feel like it without having a sense of order to things? And I think that's part of the confusion and seem like the unclarity that is not happening right now. And, you know, I know there's a motion on the table, it's been second, but let's get to the vote if we're going to vote, because, you know, this is totally out of order for far as I'm concerned, how we should be processing things.
Jim?
Virginia?
I would agree. I mean, I would have liked to have, I mean, this is exactly what a committee work should be doing, is to discuss this.
You know,
but I guess process doesn't really matter to some of us.
I'll offer my view on that topic. This issue has been brought up at two board meetings, 2 finance committee meetings. The meter is running on this issue. You know, we have bonds that we're paying 7.25% on. To the tune, we spent more than $600,000 servicing these bonds last year. I'm not sure that was necessary. And I believe I have a fiduciary duty as a board member to address this issue. I think it would be irresponsible to do otherwise. So I think we're at the point where action is called for. We need these issues addressed. Do we redeem them? You know, and what's the responsible way to go forward here? And that needs to be an informed decision. The board needs to make an informed decision on these issues. And the only way we're going to make that informed decision is with the council of experts after careful analysis. So that's where I'm at on this. And I have to wind this back a little bit. I think, you know, we have a motion. Chuck has revised it. I think, as I understand it, since you seconded it first, Virginia, you know, you have the opportunity to second it again or not.
No, Rob seconded it, the amended motion.
All right, if that's where we're at, and I believe Rob is called for the question.
Yeah, because I just think that,
again, I'm just trying to take stock of where we're at, and I believe that's.
No, I understand, but I think that, let me tell you what I think, Jim. I think that yes, you're right that this could have gone faster before the board and the finance committee, and Chuck is right that he, you know, took a lot of time, which precluded us from getting to this item. And so I was just asking how our staff would be involved. And it seems to me right now, and I could be wrong, but with Rob calling the question without, you know, in my opinion, not having my question answered and how the staff would be involved, I think that what's happening here is that staff, y'all don't want staff to be involved because for whatever reason, you don't trust staff's involvement. And to allow general counsel to direct staff when the general counsel works for staff and this board is I've never heard of such a thing. So I want to know.
Virginia,
Jim, I'm not done. It's my right. I have a right to make sure that the process is clean instead of tainted, which this board has experienced before. So just like I have the fiduciary responsibility to ensure that we're financially sound, and I've been on this board for almost 10 years ensuring that, I think that the public also has the right to understand that this process is not tainted in any way.
Do you have anything else, Virginia?
Yeah, so I want to know how we can include staff in this motion instead of having general counsel direct staff, which is the exact opposite way of doing things. So please stop cutting me off and let me finish, because we've already had the question called to shorten public discussion or the board discussion. So I would vote for this because I understand the urgency, but how is it that we can include staff in here and so that the general counsel isn't necessarily driving this process, it's staff as well, because right now staff is not helping with this process. And if Steve would like to answer the question.
Okay, Virginia, you have said what you had to say. Rob has called the question.
You asked me to ask general counsel, and then Rob called the question.
Virginia,
so I want to ask general counsel this question. Virginia, I'm not out of order. I never got my question answered by general counsel when you said ask general counsel, and then Rob called for the question. So in my mind, y'all want to cut off discussion. So if you would allow general counsel to answer how he would fit this, how he would fit staff in here, that would be great. Because that was what you did before I got cut off.
You're out of order.
No, I'm not. I got cut off.
I'd like to make a point of order, please, Jim.
Chuck.
What point of order here is no person can call the question. A more proper form of that is I move to close debate. There's no discussion of that motion. It's immediately voted upon. If a majority votes to close debate, debate is ended. If the majority does not.
Are you making such a motion?
No, but what I'm saying to you is that's what Rob's, when he said I called the question, effectively he's making a motion to close debate. I'm just trying to clarify for you.
Yes, it would be a motion to terminate discussion.
Okay, Rob.
So I'm being cut off.
Rob, are you making such a motion?
May I continue, Jim?
Please.
Thank you. Okay, Virginia, I thought you were done. That's why.
No.
Excuse me. Okay, let me finish, please. Okay, I thought you were done, and that's why I called the question to end debate. You can continue with all your questions that you want, and as soon as the dust settles here, I'll call the question or end debate.
Okay.
Thank you, Jim.
Thank you, Rob.
Sure, go ahead.
No, that was the only thing, because Jim had asked.
Virginia, the floor is yours, and I'm going to adhere to policy here. You have the floor for 5 minutes, and then it will rotate to another director.
That's fine. I haven't even talked for 5 minutes. But what I'm saying is, when I brought up the general counsel thing, you said, do you want to ask general counsel? And then that was when I was interrupted. So I would like to ask general counsel that.
The floor is yours for 5 minutes, Virginia.
So Steve? I think perhaps I understand your question. I have no intent on bypassing district policy or district staff. You have excellent staff. Will work with Kathy. I will assist her and support her in as quickly and efficiently as possible, eliciting proposals from qualified financial advisors who will be able to answer the questions in the motion in a manner that does not serve their self-interest. In other words, that they will charge the district an hourly rate rather than embed their fees in any refinancing. And together, Kathy and I will do a bang up job for you.
Okay. Thank you.
You're welcome.
All right. We have Chuck's made his revised motion. Rob has seconded it. If there's no further discussion, I'll ask Michelle to call the vote.
Director Crawley?
Aye.
Director Jones?
Aye.
Director Solano?
Aye.
Director Bernstein?
Aye.
Director McLaughlin?
Aye.
Woo.
Thank you.
All right. Discuss topics for the upcoming joint meeting with the City of Menlo Park City Council. There was a list of items in the chief's report. I would suggest, given the lateness of the hour, Chuck, you're the liaison with Menlo Park. Have you entered into any discussions with them on topics?
Well, I had a conversation with the mayor, Drew Combs, about this. He suggested topics. I brought up topics that I believed were on the table from the district. And what you see here, with the exception of number 7, where I made an error and it should read Middlefield Road and not Willow Road, this is a combined list of all the topics. Drew expected to discuss this with the Menlo Park City Council. We both agreed that 3 or 4 topics was about the most we could do. And I really would like, I don't know, a sense to the board. I'm not pushing any topics here. I would like a sense from the board what they consider to be the 3, 4, 5 most important topics that they would like to discuss. I would then take that back to Drew, hear what he had, and hopefully we could combine those lists and come up with a common list.
Virginia?
Just a quick question, Chuck. Is Drew taking this same list back to the city council to get their input too?
He asked me to write, I was taking notes at the meeting. He asked me to take them down and send it to him, which I did perhaps 2 weeks ago. And so, yes, he was taking the same list. He had it the day before they had their planning session.
Okay.
All right, so Chuck, you're suggesting that we, out of this list of 7 items, that we reduce this to a handful?
Yeah, 4 or 5.
All right. Perhaps, rather than go through that process now, we could just do this, by polling each director by email. I mean, we could send out the 7 items and perhaps ask Michelle to do that, send out the 7 items, and we'll do as we did with the strategic plan, you put a dot next to the one, we'll say 5 items, so everybody put a dot on their top 5 items, and then we'll just go with the ones that garner the most support.
That would be fine. The other way to do it is to where you actually you prioritize them, so you number them 1 through 7, and whatever has the lowest vote,
sure,
is the highest one.
That works too. Would you prefer that process?
Well, I think it would put some sense of priority into these things rather than just it's 1 of 5.
Okay, Michelle, could you do that for us?
I can.
Okay, thank you. All right, do we have a need to discuss anything else on this item? Do we have a date for the meeting?
Yes, we do.
16th.
The chief's report.
5 to 7 and 16th.
It's March 16th from 5 to 7.
Correct.
Okay. Thank you. So, Chief,
it will be virtual. I guess that goes without saying.
Okay. So, Chief, the 5 items that we select, you'll have staff just develop materials for the
yeah, we'll be like every other time, we'll be prepared to speak to those. So whatever you come up with, then we'll spend some time in there and be ready. No different than any other joint meeting we've ever had to address, the issues or concerns, or even do a little presentation on it if that's what you like.
Okay, very good.
Usually, if I may say so, Director Bernstein, with the City of Menlo Park or any other agency, we have a joint meeting with. Usually the agenda is made up between both the agencies to come up with one agenda. So are we going to do our top 5 and then we're going to, in 2 hours, be able to talk about our top 5 plus whatever they had in mind?
No, the idea was somehow to conform these so there were 4 or 5 total.
From both of you?
Yes.
So when we get the top 5, then you'll forward it to them, and the liaisons will come up with an agenda. Is that the plan?
Yes.
Okay, thank you.
All right. Thank you for that, Michelle. Committee reports. I'll go first. We met as the HR committee to discuss the issue of citizen representation on our committees. We considered, Rob and I discussed the issue, and we came back to the view that current policy properly addresses this issue. That the start of the year, the board president has the prerogative of making committee assignments, and that includes the citizen representatives. In any given year, it's the prerogative of the president to appoint a citizen representative or not. This year, I elected not to. Next year, the president will be free to select someone or not. So a citizen to serve on a committee. So it's our recommendation that policy is adequate in this area and there's no need for change. Rob, would you add anything to that?
Just that we had discussed that it would go to the full board, the choice, if it was made by the president.
All right.
I'm sorry, Rob, you mean if the president chose to put public members on, it would go to the full board for approval?
Yeah.
Okay. Which would be, it's pretty much the same with all the other committees, right? Or the members.
Yeah.
Yeah.
Thank you.
All right. Chuck, Finance Committee?
All the items that were on finance were on our agenda tonight.
Okay, thank you. Let's see, did strategic planning meet?
Yeah, we did.
Okay.
And Mandy gave us a breakdown on the accreditation project. And then we, on following Monday, Mandy again met with Melinda, and we went over items that needed to be done. And some of the things that Manny explained with this mentor program were kind of left to what the support function is for the accreditation project. He thinks he can get it done by the end of the year. And he's in the process of taking the board goals and of course the accreditation strategic plan together so they both flow. Chuck, you want to add anything?
No, that was it.
Okay, thank you.
Virginia, ePrep?
Yeah, pretty much everything that we discussed with regard to the RFP, was on the agenda tonight, and I appreciate that the board voted to move forward with this RFP. And I want to thank the chief and also his staff for working on this. I thought it was a good RFP, and we'll be excited to get back that information. Who's going to be working with us on this. I think that the public is also very excited about how we're going to look at the program and see how they fit in and how we can improve things. So that's it that I've got. Robert, do you have anything to add on that?
Nothing. You said it all.
Thank you.
Liaison reports. Virginia, I know you and I met with Atherton, but you're the designated liaison. So if you guys
yeah, so this is going to be a little longer than the normal report, but I did meet, I had two meetings and I was involved with. One was their goal setting meeting, which was, I think, at the early part of February. So I sat through that, and the designated liaisons, or ad hoc committee as the town council calls it, specifically to work with coming up with possible agenda items for the joint meeting, were Elizabeth appointed them, Rick DeGolia and Diana Hawkins Manulian. So that doesn't mean that they are going to actually be the liaisons to the fire district. That's, I think, going to be redone again by the mayor, Elizabeth Lewis. So we'll see, but hopefully Rick and Diana will stay on as the liaisons for Atherton for the fire district. So we'll see. From that particular meeting, it sounds like, they were they were brainstorming on things that opportunities for partnerships with the fire district. But at the same time, I don't fully think that the detachment issue is off the table, because it was brought up several times by the mayor and a couple of council members that detachment should be an option for a referendum, with the residents, for them to vote on. So I don't know, that's something that they're going to have to work out. But I think that our stance as a fire district remains firm that we're not for detachment. So we'll just move forward based on, on our what we want to do based on our philosophy of no detachment. So fast forward to the meeting that we had, Jim and I had, with regard to potential items for a joint meeting, which has yet to be scheduled. So we had a meeting with the two liaisons specifically for coming up with ideas for a joint meeting. And there were 6 things that came out of that we thought would be good things to good agenda items, and that we agreed to bring to our respective elected bodies. And Michelle, I can give you this because these are just my handwritten notes. Okay. But sorry.
Oh, I just said okay.
Okay, so the first one is, just basically having the chief update the town council on, where we are with the fire stations. I mean, they pretty much know, that station 2 and station 6 were done and that we're working on station 4, but just a recap of what's happening and what the other orders, or what the order is for the other stations, including station 3. So Harold, that's something I know that they're interested in. It seemed pretty easy. Also, they wanted to hear about whether the council chambers might be doubled as a new EOC. So, they'll probably want to discuss that. Community preparedness, an update on that, which would probably include the independent program review. If we have any information, which we may or may not, depending on when our meeting is held, the joint meeting is held. And for Harold, they wanted to find out, because this was brought up in their goal setting session, about tracking responses by station areas, or response by station areas. And they wanted to ask you about talking about Zone Haven and possibly asking the developers to do a demo if that's possible at this joint meeting. Any kind of information, this is the 5th item, for smoke alert information. How can cities and towns be alerted when it comes to smoke, not just air quality, but smoke alerts. And also, chief, to possibly do a standard of coverage update. So those were the 6 things that they were interested in hearing about at the joint meeting. So Jim, those were my notes. Do you have any additions for potential items?
I do not.
Okay, so I can give you this, Michelle, if you want.
Yeah, that would be great.
Okay, and there are 6 proposed dates for the joint meeting. So they're basically March 3rd, March 4th, March 15th, 18th, 23rd, or 24th. And I'll give you this information too, Michelle. And then maybe we can do a doodle poll or whatever that, to get our preferences.
keeping in mind that they're going to have this same discussion, you know, when they would like to have the meeting. So I know that these dates have been given to George or the town council manager or the town manager by Diana. So they're moving forward with, you know, trying to figure out a date as well. So that's pretty much the update that I have. I mean, Jim, do you have anything to add with regard to anything they said?
No, I think, again, you covered it very well. Yeah.
Thank you.
I have a question. Go ahead, Chuck.
Robert?
No, you was first. I'm sorry.
Chuck?
Okay. What is a smoke alert? I mean,
so it's interesting, Chuck. So Diana's issue, one of her interests is understanding the air quality, but the air quality comes in different forms, right? It's particles, or, you know, what kind of, you know, if there's like smoke alert from the fires. And, you know, the other thing is she's interested in is the kinds of smoke, right? Whether it's just from fires, or how much carcinogens are in smoke from these fires. So, you know, I don't know. I think maybe that's something that we can add on to the agenda just to get an understanding of what the council really wants and what maybe we can help them with, if anything. You know, we have alerts, you know, like SMC alert, for example, you know, for, I don't know, mountain lion sighting. You know, are there any kind of smoke alert systems that can be tied into that to alert people about smoke?
Okay.
I know that probably doesn't answer your question, but I think that if they want to discuss it, we might get more information.
I thought maybe it was like something went off, an alarm.
Like a smoke alarm? No. This is with regard to
smoke arrived over Atherton or something.
Robert, did you have something?
It's mainly a procedural question. Virginia, you mentioned that the dates that they wanted to meet with the fire district. Is it my assumption that the list there was a list of things that they wanted to talk about, and I was wondering if there was their list, or is this a list that a joint list that both the fire district and the town of Atherton want to talk about together, rather than, because I don't think we have had a conversation amongst ourselves about what we think we might want to talk about with them, or do we want to kind of synthesize a list that we have 3 or 4 items to talk about, or we just want to go with their wish list and then we just kind of sit there and talk about that?
Well, so it's a good question, Robert. So when they came to the meeting, they had a list of what they called partnership opportunities. But the thing is, this ad hoc committee, it was a very confusing structure, actually, that I was confused about even when they talked about it in their goal setting meeting. So Councilmember DeGolia and Councilmember Hawkins Manoulian were only appointed as an ad hoc committee to come up with joint meeting agenda items. They were not in any position, nor were they directed by their council to even discuss, or as they would put it, Jim, we hated the word negotiate, right? Partnership.
Well, we took it off the table.
Yeah, we took it off the table, but that's the word they kept using. So Rick and Diana were not the people that were designated to even talk about that. So my understanding is that the 2 liaisons who would be designated to talk about partnership opportunities have not been appointed yet, if that makes any sense at all. And so they, as a council at the goal setting meeting, came up with these ideas. We have not come up with our ideas, which we probably should do at some point. Jim,
Virginia, pardon the interruption, Virginia. It just occurs to me, both for the Menlo Park joint meeting with Menlo Park and Atherton, should we consider a special meeting just to refine our agenda list and develop our positions, you know, so that we're speaking with one voice when we do sit down with them.
You mean for the partnership opportunities? Because these 6 items were the things that you and I agreed that we would present to the fire board and they would present to their councils. That
those are Atherton's issues, and we may have our own that we want to present to them.
Yes. So no, but these,
okay.
Robert?
No, I let Virginia finish. I'm just busting in the conversation. Go and finish, Virginia.
No. So these were the things that like we told them that we could do, like, you know, giving an update on the fire stations. But for partnership opportunities, we have not discussed that. And I made that very clear in the goal setting meeting. And Jim, this was the part where, remember, they wanted to bring in a subcommittee of members of the public, which, you know, I mean, I didn't want to speak for the board, but I told them, the Atherton council members at their goal setting meeting, that we haven't even had that discussion, right, for those kinds of things that they wanted. But the six things that I mentioned were not the partnership opportunities. Those were the things that they wanted to discuss or have us discuss at the joint meeting. But I do think, Jim, that we need to have a special meeting to discuss partnership opportunities, as we're calling them, or they would call them negotiations. I mean, I don't know how long our list is going to be, you know, so, but I didn't want to speak for the entire board, except letting them know that we were not for detachment, essentially. But I do think it's a good idea for us to have a special meeting to hammer out our positions and what we want to talk to them about in terms of partnerships. Did that answer your question, Robert? It's kind of confusing because their structure's a little confusing.
No, it really didn't, but I mean, partially,
okay.
but it's partially. What I was trying to want to speak to is that, you know, it sounds like deja vu all over again. We're going to walk into something that unprepared, and I think you're right. We need to sit down and talk about it as a group, so that any further conversations that we have with the town of Atherton or City of Menlo Park or even East Palo Alto, that we have positions, statements that we should have at toe, no matter any one of us, because, you know, there's a potential over our heads is the threat of going on their own again with a new fire department. It just seems like that is a threat to get to this statement you use, a reference that you made in terms of things that they want, a partnership opportunities. And so somewhere along the line, we need to take that off the table, you know, somehow, because anytime they want something, they're going to hold this, we're going to start this detachment conversation or hint or even a drive-by look, you know, things that they don't want to if they don't get their way, they want to talk about detachment to draw us into that conversation. And I'm not, do we really need to be in that position? I don't think so. And we need to talk about the positions that that we really want, so that we don't get either drawn into it or given an impression that if they bring that up and they don't get their way, that they're going to start down the detachment road again. So,
well, I'm going to just make it very clear, Robert, that there are council members, I don't know if it's 2 or 3, who do not, and possibly even the town manager, who do not believe that detachment is off the table. So it's not, things haven't really changed in that regard, although I do think that Councilwoman Hawkins Manoulian does not want detachment, and I don't think that Council Member DeGolia wants detachment. So, yes.
And again, pardon my interruption. I think if it's the will of the board that we have a special meeting, you know, I would suggest that we do it before March 16th and include Menlo Park.
Yeah, I agree.
And then Atherton. Just given the lateness of the hour, again, if it's the will of the board, we can ask Michelle to find a date, and all this and more will be the topic of.
Yeah, I agree, Jim. Thanks.
Chuck?
Real quick, I would like to suggest, since we've already scheduled the meeting with Menlo Park in March, and to help give us a little bit more time also, that you ask them for dates in April instead of March.
Ask Atherton?
Yes.
Okay, yeah, good idea.
Okay.
I think weren't there some April dates?
No, they really wanted the meeting in March.
Yeah, I agree.
But we can ask. I'll ask for April dates too, early April. But okay. I mean, what would preclude us from having a March 23rd or March 24th joint meeting?
If we're able to do our special meeting before the 16th.
Right, which I think we should.
Yeah, I do too, and discuss both Menlo Park. And again, I don't know if I don't want to count out the county or East Palo Alto. I don't know if there's a, that should be considered as well.
So Jim, when were you thinking that, I mean, obviously before March 16th, right?
Yeah, I'll just ask Michelle to do the doodle poll and we'll find a date. Yeah, if we could do it I'd say that first week in March would be good.
Okay, so then I'll go back to Atherton if y'all want and ask for early April dates, but I'm not going to take March 23rd or March 24th off the table.
Okay.
I'll leave those last two dates on there, and then we'll go from there for our early April dates as well.
All right.
Is that okay with everyone?
I think so. We'll run with that.
And I'll look for a doodle poll from Michelle for special meeting dates.
Great, thank you. All right, any other liaison reports?
I don't have any.
Okay, Rob, do you have any?
No.
All right. Let's see, reports, request of directors. All right, is there anything? All right, saying none. I don't have a president's report, so I think that concludes our business for the evening.
Public comment number 2.
Public comment number 2. Thank you.
And we do
Michelle?
not.
Okay, there is no one. Motion to adjourn.
So moved.
Robert.
Yeah, one last thing, Chief. Tell the folks over at I really appreciate the letter that they sent from St. Anthony. And tell the staff thanks for all their hard work pulling the toys together over the holidays.
Yeah, no worries.
And especially during COVID times.
Thank you. I skipped over that. Great program. I was happy to participate and look forward to next year. All right, motion to adjourn.
So moved.
Second.
All right, Michelle.
Director Crawley.
Aye.
Director Jones.
Aye.
Director Solano.
Aye.
Director Bernstein.
Aye.
Director McLaughlin.
Aye. All right, good night, everybody.
Good night. Thanks.